today, $42 billion of 3-year notes. Tomorrow, $32 billion of 10-year bonds. And Wednesday, you will get a $22 billion slate of 30-year bonds in America.
Man, that's a full faith in credit. You really wonder when credit comes in, corporations like we saw with Apple the other day issue as well. Let's do this, folks. We're going to do this for Global Wall Street. We can talk about the VIX. We can talk about volatility. My amateur take is, bigger number means more fear. Lower number means less fear. But it gets a lot more sophisticated. Dean Kernit joins us now, Macro Risk Advisors. And Dean, I want to go right to there's a curve, which is the VIX. And then there's the guesstimate of where the VIX is out any number of months. And that curve now is very steep, which I don't understand that. What does it mean, Dean, when you see a steep futures market for volatility?
Right, thanks. So it actually is quite interesting right now to look at the combination of the level of the VIX, which is, of course, way down from its incredible peak, but also still relative to history, quite high. So to see a high VIX, but also to see, as you noted, an upward sloping curve is actually pretty rare. So let me just give you a quick bit of perspective on that. So the end of 2018, remember we had that big risk off. Powell was tightening in the face of the market. The VIX reached about 31 on December 24th, but 6-month volatility was much lower. So that's an inverted vol curve. The VIX is higher than future volatility. And now you have the opposite. So if I look, for example, at 1 month implied volatility on the S&P, that's where the VIX comes from. That's about 24%. But if I look at 6 months, it's about 27%. So you have that upward slope. How do I read that? I think it's a function of just the amount of artificiality that is in asset prices right now. I'm not saying it's good or bad. It's just that folks are really struggling to make sense of what to do here. There's been a massive economic sudden stop, a gigantic policy response from the government and the Fed, and it's just really difficult to know where asset prices are going to land. And so in some ways, we've punted that uncertainty out a couple of months, and that's why I see longer dated volatility out, call it 6 months, clearing at higher levels than the VIX is.
Dean, what you said is really important for this moment, the artificiality of current pricing. And do you have a sense of kind of where that artificiality is coming from? Is it coming from basically what is becoming yield curve control by the Federal Reserve? Is it coming from Washington, D.C., or is it coming from the hopium that we're going to see something more akin to a V-shaped recovery, at least in markets, as we go forward?
I think it's really at least of the first two rather than the hope. I think that the degree of support provided by Congress and the White House in a bipartisan fashion so far has been unbelievably strong. I saw one metric that said on a Q2 basis, personal income is actually going to be up. So it just shows you how much of the hole that, at least for now, the government is filling in. And then on the second front, of course, the Fed, wow, what a tremendous amount of, both explicit buying, a tremendous amount of forward guidance, wading into the private markets, and it's put a floor in a large way under asset prices. And it's just, listen, the old adage of don't fight the Fed, I don't think it couldn't be more relevant than right now. It's really difficult to get in front of this, and to some extent I think this is the market's in a waiting game. We're trying to gauge the policy response, not just now, but the future wherewithal. And you're starting to see some breakdown of that in terms of the deficit goal in Washington. McConnell starting to discuss that there are limitations to what we can do. So it's that part is challenging. And then I think the other part that we're just trying to gauge is that the reopening, the efficacy of reopening, at least so far from my perspective, the scorecard there doesn't look promising if you look at other countries. It's still obviously very early, but there's been a couple of setbacks in South Korea, in China, in Germany, in Spain. And so I think that's where ultimately the market's going to have to find some metrics to watch. But I think the low VIX right now points to that it is in a little bit of no man's land in terms of figuring out the market, what risk really is.
Dean, with that in mind, and you've touched on something quite important, the risk of reopening at a second wave is something likely to sit on sentiment for quite a while. Do you think that makes it difficult to rotate to the more cyclical areas of the market that have lagged in the rally off the bottom over the last 2 months?
I think so. I was just looking at the just growth versus value. The divergence this year is on the order of 50% outperformance growth versus value. And so, if value is embodied in cyclicality, I do think it's very tricky to really get, behind the notion that, one, people will be able to come back because the infection rates are clearly coming down. And then, two, I think the psychology never is too long, but I think the psychology is pretty important. Folks, even if they were given the opportunity to come back, some are, but many are not. And just given the leverage inherent in a lot of cyclical businesses, the balance sheet considerations, and the degree to which they really need, whether it's a fully stocked hotel, a plane with no seats empty, it's going to be very difficult. And I think, the psychology makes that more challenging.
Tom, I think this is the decision of the moment, and to make it really, really simple, do you stick with what's worked over the last 6 weeks, or do you rotate to what hasn't? And what's worked is big tech. The big five, all positive year today. The S&P 500 lower by 9-10% on the year. It's just unreal how much outperformance we've had from the big five.
What's so interesting here is you buttress it up against this liquidity solvency issue, John, that we've seen over the weekend. And certainly, with the Columbia Airlines, Avianca, their bankruptcy, and, you look at Lufthansa with a full bailout in Germany with potential 20% ownership by the government. It's not only two worlds, it's almost three worlds out there.
Yeah, Dean, I think Tom's brought up something important. Things are still breaking. And you've shared something that I share with you, that when things move fast, they break. Have we seen all the broken parts of this huge move very, very quickly in the last few months?
Yeah, I think that would be way too optimistic to suggest that even as 83 VIX is probably not coming back, that the aftershocks are likely not fully appreciated yet. Just think about post the financial crisis in 2010, we had the flash crash. 2011 and 12 is when the Eurozone sovereign crisis began in full earnest. And those were, in some ways, aftershocks of the great financial crisis. I just don't think so. When you're seeing, I know you guys just covered the, Fed funds futures trading north of 100, implied rates in the U.S. below zero. We obviously saw the crude meltdown. It's just in a world where things are moving so fast and the policy response is just so enormous. And the deflationary forces upon which the policy response is built are so enormous, it's just really difficult to think that we've got some, resolution that's not going to see some crazy things happen. And I think this is where one of the things, we spend a lot of time on hedging at Macro Risk Advisors, but also on portfolio construction. And I just think that gold deserves an increasing allocation in the portfolio. It's an asset that has negative correlation attributes to the risk complex. And I'd like to say it's just long paranoia. And I think we are entering into a period of increasing, unfortunately, paranoia in the monetary system as we're going to, come to the market with $3 trillion of issuance in 1 quarter. It's just, we're kind of in no man's land. And so I'm just continuing to recommend to folks to really take a hard look at gold.
Dean, really, really thoughtful stuff. Dean Kerner there of Macro Risk Advisors. Gold on the year up by 12%. Just on the issuance side of things, not just on the sovereign side, Lisa, but also on the credit side. I just wonder if we started to see a bit of indigestion over the last week. That United bond issue that did not go through, I wonder if that's the poster child for that indigestion in the last week.
United is its own test case, and there was an issue there of the collateral they were putting up to back the bonds were these old planes that will probably get destroyed, and people pushing back. But that said, there is a question of what the purpose is of issuing short-term money at 11% yields for an industry facing existential questions about its existence and the way it will look in the future. That is underscoring the airline industry.
Yeah, it'll be interesting to say the least here. We say good morning to all of you this morning. John Farrell, Lisa Abramowitz, and Tom Keene. The Bloomberg NJIT STEM Report, always brought to you by New Jersey Institute of Technology, ranked in the top 2% nationally for alumni mid-career earnings, and number one for student upward economic mobility. Learn more at njit.edu. Here's Bob Boone.
Tom, Jonathan, Lisa, good morning. Here's what's making news in science, technology, engineering, and math. 1 week from today, SpaceX is set to launch its latest flock of Starlink broadband satellites, which up to now would not have made astronomers happy. The growing string of mini orbital relay stations to provide global internet service has been creating what look like strings of Christmas lights parading around the planet, and that has been interfering with observations through ground-based telescopes. Now, SpaceX founder Elon Musk says the latest deployment will use sunshades made from a radio-transparent foam to help block solar reflections, sort of like the sun visors on a car. Scientists are hopeful they'll make the spacecraft less flashy from the ground. When I was a kid growing up, well, it's tough to remember back that far, but this is not what I recall them telling me the moon would be made of. Since there's plenty of moon dust up there, it makes sense to think you could use that to make concrete to build things. But where are you going to get the water to mix with it? Wait for it. The European Space Agency says a useful ingredient in making those building blocks could be human urine. Researchers in a recent study the agency sponsored found that urea, the main organic compound in urine, would make the mixture for a lunar concrete more malleable before it hardens into its sturdy final form. This could give whole new meaning to the European Space Agency, just saying. Actually, I think the word you're looking for is practical. That's the Bloomberg NJIT STEM report. Tom, Lisa, John.
Bob, thank you. Bob Moon there with the STEM report. Let's get you some news, some headlines worldwide. Here is Michael Barr.
John, Lisa, Tom, thank you very much. The coronavirus pandemic is inching closer to the West Wing. The two White House staffers tested positive for COVID-19, including the Vice President's press secretary. Vice President Pence is expected at the White House today as new safety protocols are now being considered. The UK will now use a COVID alert level to guide public policy. Prime Minister Boris Johnson, in a televised address, says will work in similar fashion to any threat. The lower the level, the fewer the measures. However, social distancing at this time is not a variable.
You must obey the rules on social distancing, and to enforce those rules, we will increase the fines for the small minority who break them.
Temperature checks and mandatory face coverings are two measures Frontier Airlines is taking to ease customer fears amid the coronavirus pandemic that has crippled the air travel industry. Frontier President and CEO Barry Biffle.
If you test over 100.4 and we retest you again 10 minutes later and you continue to be over 100.4, we will deny you boarding.
The temperature screenings begin June 1st. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you, sir. Thank you very much. That was your news with Michael Barr. Here are your price action. I get my words out this morning, guys. Equity futures are down 23 points, down 0.8% on the S&P 500. In the bond market, we've talked about the amount of issuance coming up through the week from the Treasuries, 2s, 10s and 30s, 3s, 10s and 30s rather, a ton of Treasury supply. Yields up a single basis point to 0.69% on a 10-year.
With a Bloomberg Business of Sports report, I'm Michael Barr. The next match involving Tiger Woods and Phil Mickelson involves a $10 million donation for COVID-19 relief efforts, along with plenty of bragging rights in a star-powered foursome May 24th at Medalist Golf Course. The match, Champions for Charity, will be a televised match between Woods and Peyton Manning against Mickelson and Tom Brady. The format will be better ball for the front nine and modified alternate shot on the back nine, meaning both players hit tee shots and they take turns from there. Formula One might start its racing season as soon as July. Meanwhile, IndyCar says it will open its delayed season June 6th at Texas Motor Speedway. The head of China's Football Association says teams will implement temporary player pay cuts of up to 50% to help teams manage losses from the coronavirus outbreak. And that is a Bloomberg Business of Sports report. I'm Michael Barr.
Jenny Liss, Jewish communal leader and philanthropist, talks about why she chose the Jewish Communal Fund for her family's charitable giving.
For a lot of people, it would be the convenience factor. I don't have to track anything.
If charitable giving is an important part of your life, JCF can help you organize your philanthropy with our donor-advised fund. A fund can be established with a minimum tax-deductible contribution of $5,000. Make grants to your favorite charities, and JCF handles all the administration and reporting.
At the year end, our board awards community grants from fees and endowment income to UJ's annual campaign. We also make gifts to specific organizations, the elderly, Holocaust survivors, the hungry. The fact that we come together as a community at the end of the year to build community, that's what makes us different.
Get better at giving back. To find out more about JCF's impact, visit jcfny.org and download the Giving Report. JCF, we have a gift for giving.
Global news.
Sick of this. We're gonna do this doggy style.
Did somebody say just eat?
Me, get delivery like a G. See, hungry dogs gotta eat. I get mines every day, every week. Chicken wings to the crib, I'm sitting in. Burger in the low. Hope they put the pickle in. Wonton on a catamaran. Oodles and noodles, thank you, my man. Tacos to the chateau. Please, did somebody say
just eat?
Private jetting in the night sky. My man hand glide by with my fried rice. Right? What could you not love? Bought a slice on the side of the hot tub. Ooh, what you gon' do, boo? Chocolate fondue right on cue. Even dipping in the sea. I see food, seafood sees me. JUSTEAT.
Somebody say just eat.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are retreating alongside European shares as investors weigh the latest moves around the globe to relax restrictions for the coronavirus. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down about 27 points. Dow futures down 220. NASDAQ futures down 60. The DAX in Germany is down 0.9%. 10-year Treasury down 2/30 seconds, yield 0.69%. The yield on the 2-year 0.15%. NYMEX crude oil down 3% or 75 cents at $23.99 a barrel. COMEX gold is down 0.8% or $13.20 at $1,700.50 an ounce. The euro 1.0818 against the dollar. British pound 1.2303 and the yen's at 107.33. Joe Quinlan at Merrill Lynch Bank of America says the U.S. economy is at the maximum point of pain and investors should be buying select stocks.
18, 24 months from now, we're going to have a totally different conversation about probably debt, inflation, and other issues. But I do think there's growth on the other side, and there's opportunities now to put money to work.
Again, Joe Quinlan at Merrill Lynch Bank of America. AMC is up almost 38% this morning after weekend reports from the Daily Mail suggested Amazon is thought to have held talks about a potential takeover of AMC, and Coty up 13.5%. It agreed to sell beauty and hair care brands, including Wella, to KKR. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you. Thank you very much. I think we can all agree one of the outcomes of this particular crisis will be more debt and more deglobalization. That's the take from Bank of America and others as well. And the latest reporting from the Wall Street Journal, Tom, suggesting we will have more deglobalization. Supply chain repatriation, taking some of these factories, some of this production out of China and bringing it back home.
No question about it. Enda Curran joins now. Folks, he's wonderful. He's in Hong Kong, does economics for Bloomberg News, but that barely describes his holistic tone. Enda, I'm having such a joy reading George Magnus's book, Red Flags. I'll put it out on social. Folks, we talked to Mr. Magnus the other day of Oxford, formerly with UBS. And Enda, he has a chapter in his book, The End of Extrapolation. Has President Xi's extrapolation of China growth ended with John Farrow's deglobalization?
Well, there certainly is a lot of chatter on the supply chain front, as John mentioned there earlier on. For example, Japan's government has put aside around $2 billion to get Japanese companies to pull out of China and come home. We know that India, too, is putting aside a patch of ground to try and attract companies ostensibly out of China. So the supply chain story is being talked about, especially in essential goods. But let's not forget that China still offers scale. And not every country offers scale. Remember last year there was a rush into Vietnam during the trade war, and Vietnam quickly became hit maximum capacity. And the narrative turned around again about how China can offer various metrics that other countries cannot. So all I would say is definitely the deglobalization story and theme is a very pertinent one, but China still has some cards up its sleeve.
And from your position, from your perspective, what's really driving it? Is it national security, critical infrastructure, or is it sweeping protectionism? What's behind all of this?
Well, I think, in the first instance, there's been a realization that, hang on here, most countries are vulnerable when it comes to certain areas, i.e. medical kit, basic medical protection, the PPE kit, right? I mean, we heard the EU Trade Commissioner, Phil Hogan, make this point last week. There's going to be a reshoring of those kind of goods, for sure. Then you move into the second sphere, which I guess to your point about is it nationalism, is it national security? And that's certainly the case, I think, when it comes to technology, and that's being driven by the US, less so out of Europe, I'd say. There are concerns there over who gets to control what and who gets to lead the technological race around the world, and that's what's driving that side of it. But I think, though, as I say to you, let's not forget there's a counter view to all of this. It's not just about China offering scale. China also offers one of the world's biggest markets, and there's a line that's used a lot out here, which is called you want to be in China for the Chinese market. And a lot of MNCs may reshore some production to other markets, but are going to have to remain in China if they want to service that market.
So underscoring some of the tensions that we have between the U.S. and China that are leading to these supply chain issues are an ongoing lack of transparency from the PBOC, from Beijing, from Xi Jinping. And this comes at a time when Wuhan, the Chinese city where the global coronavirus pandemic began, actually is reinstating some shutdowns after a resurgence in cases. And we're seeing it elsewhere in China. Can you give us the latest on that and how that's affecting economic prospects for the nation?
Yeah, for sure. I mean, we have had a scare up on the North Korean border as well. You mentioned there are, I think, 6 cases in Wuhan today. There's certainly a concern that the virus hasn't gone away, and how could it be eliminated in a population of that size anyway? It's not just China, by the way. Seoul had another scare this weekend that started in a nightclub. We know that cases among the domestic working community in Singapore are going through the roof, and India's hit records today. So, the Asia story is a better one when it comes to the virus, but this thing is still pernicious and hasn't gone away, and that is dragging on economic growth. And we are going to get numbers from China this week on the retail side of the economy and on the investment side of the economy, all of which are expected to show that things are getting better, but they're still not great. And that's not just because of what's happening in China, but it's because, of course, the global slump, which is also weighing on the external side of the China story.
Ender, in many ways on this particular crisis, you're several steps ahead of us in the United States and elsewhere in Europe, simply because you experienced the crisis first. From your experience, from the conversations and reporting that you're doing, does a second wave of infections necessarily have to end up with another shutdown?
Well, I think that's what everyone's concerned about out here, Jonathan. I mean, we have had some scares, maybe not a full-blown second wave, but certainly we've had scares where restrictions have been eased and then only for them to be rolled back again. I know in Hong Kong, for example, if you were to walk around the streets here now, other than people wearing masks, you would think that, there's no threat in the virus anymore. But when you speak to the business owners, and we've spoken to a lot of them actually in recent days, they will tell you that if there is another wave, the first thing that happens, governments will shut down restaurants, shut down public spaces, and that wipes out your retail sector, wipes out your bars and restaurants. And that's a story right across the rest of the region too. Look at Singapore. They thought they were clear. They had that outbreak among the foreign workers community, and they had to enforce even stricter conditions. So I think the second wave or third wave even fear is very real out here, and it definitely is one that would have a hammer blow to an economy, because until there's a vaccine, certainly the commentary I hear and the people I speak to, there's no confidence that it can be contained without one.
And fantastic to catch up with you. Always enjoy your experience and perspective. Enda Curran there, Bloomberg Chief Asia Economics Correspondent. Guys, this is critical. The administration said to me on Friday that if we get a second wave, it doesn't necessarily have to end up in another lockdown, Tom, because they've had this time to build up the infrastructure. They've had all this time to build up the infrastructure to respond. And if you remember, one of the worries was that if you did have a huge wave of infections initially, that we didn't have the capacity in hospitals to deal with it. And I think that if there's a little bit more confidence, it's around that particular issue, as we do face the real prospect, Tom, the risk of a second wave.
Well, the risk of the second wave can be country to country as well, the geography, the people, the culture. But I'm going to, John, I'm not going to mince words. The FT log chart on cases and deaths is not U.S. filling. It's a really ugly U.S. chart.
A lot of ugly charts doing the rounds at the moment. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abravich. You are listening to Bloomberg Surveillance Live on Bloomberg Radio.
Hey y'all, Jeff Foxworthy here.
Imagine winning 10 grand.
Yes!
With Set for Life, you could win 10 grand every month for 30 years.
Get in! Amazing! Woo! Yes! Sweet! Unbelievable!
Set for Life from the National Lottery. Your numbers make amazing happen. Play Monday online or on the app. Prize may be capped. Rules, procedures and game-specific rules apply. Players must be 16 or over.
Max is dreaming of riding a giant chameleon whilst fighting a clan of ninjas. But in reality, he's helping fight COVID-19 in his sleep. Like thousands of others, he's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments.
I'll fight you.
You go, Max. Search Vodafone Dream Lab and join the Dream Team tonight.
Dream Lab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs.
Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
This is another ad for QuickFit. If you're still using your car for essential journeys, this one's for you. QuickFit want you to know that their centres around the country are still open, but only to carry out essential work and maintenance. They're taking extra measures to keep their staff and customers safe, so you can be safe when you're out on the roads. For more information or to find your local centre, visit quickfit.com. QuickFit, still there when you need them.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
Coronavirus is a global pandemic and a local story, but vast swaths of this country have no local news to speak of. It's the business model, stupid.
If a Starbucks had given away coffees for free and then started wanting to charge $5, people would have gone nuts.
The death and perhaps new life of local news on this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. is Bloomberg Surveillance Economics.
Certainly, we've got to put a floor under the economic carnage.
Markets didn't believe the coronavirus would take down the world economy.
Finance.
The sellers are not necessarily finished, but quite exhausted.
Investment.
That's the reality that we have to settle ourselves to. This is the start of a depression.
We're going to have a bounce back when everything is open. The question is, what is the shape of the economy from there?
Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz on Bloomberg Radio.
Good morning, everyone. John Farrow, Lisa Abramowitz, and Tom Keene. We welcome you on a Monday morning after that jobs day that was most challenging. And without question, the economic follow-on from the data is an even grimmer view out 30 days. We'll see where that moves through the month of May and into the June report. We say good morning, and of course, looking at markets that have deteriorated. When I walked in the door here, up was the tone, green on the screen, and it is reverse John futures, negative 30, and the VIX out almost 3 big figures. That's a weak market to start the day.
Yeah, bumping along the bottom here, Tom. Bit of tension between the United States and China, and a real debate in Washington about the next steps as far as the stimulus is concerned. Bit of a bounce in crude on my screen, Tom, that I want to draw our attention to. We're still down on the session by 1.5%, but the Saudis to cut output unilaterally by an extra 1 million barrels a day for the month of June. So crude just recovering just a little bit, still negative on the day, but a big bounce off the low.
Saudi signaling, and of course they talked about domestic fiscal cuts and reductions there, I think in the last 24 hours even the last 12 hours. So it's an active royal family as they try to move the nation forward. Lisa, we have curve steepening. John mentioned this earlier. The full faith and credit output of the United States is going to be extraordinary. Do we see private companies issuing debt as well?
Well, they've been reissuing record amounts, at least in the investment grade space. But as John said, there is discretion being shown among people saying we will lend to companies that seem viable and we will not lend to companies that do not. And there is a question about the increase in bankruptcies and what that will do to some of the expectations. Just a note here, especially as we look ahead to Jay Powell's speech on Wednesday. The Fed is expected to start buying credit ETFs this week. It'll be interesting to see how much they buy and which ones they buy.
Well, we'll see that along in different asset classes as well. I don't know if they're going to be buying Amazon shares here. We'll have to see.
They don't need to, Tom, by the looks of things on the screen.
You never know.
Everyone else is buying.
And it'll be Jeff Bezos' fault if they do. John, to get to our esteemed guest here, I want you to set up the international economy as you read this weekend. It's disjoint stories on the pandemic, and to borrow from Dr. Bremer, it feels like it's every nation for itself.
Well, we've got a first in, first out dynamic, Tom. First into the pandemic, first out of it, and you've got to focus on China for the reopening and the kind of data that comes out on China. And it's been twofold. Quite clearly, manufacturing construction has got up and running, but there's no one to sell to. And quite clearly, on the retail side of things, it's really difficult to get consumers to come back in a huge way without the confidence that the virus isn't coming back as well. And that's something we'll experience here in the United States in the months to come, and Europe will be at the very moment as well. How do you get back out there if you don't have the confidence? And confidence is the key issue.
And the confidence can come from statistics. And I'm going to make clear, folks, the trend is in the wrong direction on good market economic analysis. Nick Benenbrook joins us now with Wells Fargo, their international economist. And I do want to say that Mr. Benenbrook has done the hardest thing. John, this is like winning 3 Stanley Cups back to back. Mr. Benenbrook won the esteemed Bloomberg FX Award 2 years in a row. And trust me, that is unheard of. That is just an unreal accolade. I'll get John and I.
Long weekend. I can't speak either. Don't worry about it.
That's all there is to it. Nick Benenbrook saves us this morning. Nick, I look at the international economy and I wonder if I'm going to get a statistical reset of economic growth globally. I'm getting it on jobs in America. Should we anticipate markdowns and economic growth from OECD and IMF?
Yes, I think so, and thanks for the compliment, Tom. I think it's more like my high school football days, but thank you anyway. But I think definitely looking at the economic numbers, I think they're going to get better before they're going to get worse. Even the IMF, for example, just its recently released GDP global forecast said that things are likely to get worse. And I believe we've probably got at least one more quarter and possibly even two more quarters of worsening economic figures. I think the key thing to remember here is that essentially most of these economies shut down overnight. But the reopening is a much more gradual and cautious process. So as quickly as we went down, we are in a situation where I think the economy is going to come back much, much more gradually.
Nick, I'm struck by this idea that the economy is going to come back much more gradually. Which areas are going to come back, given the fact that we do see this rolling outbreak, even in places like South Korea that have been lauded for their preventative measures and their extensive testing and tracing? They're not able to reopen in a way that we used to know. How big of a drag will this have on specific sectors globally, whether it be travel, whether it be restaurants, that may not come back ever in the same form?
Yes, that's a good question, and there's I think a geographical aspect to that as well as an industrial aspect to that. You made the very good point earlier about China, and what we're seeing there is a recovery in the manufacturing sector, not so much in the consumer sector. But then there's a question of no matter what China produces, if there's limited demand from Europe or the US, just how long can that recovery go? In terms of looking at sort of some of the Western economies, there are different times when everybody went in and when everybody came out, as Mr. Farrow pointed out. But also, I think that certainly on the service sector, retailers, as you mentioned, retailers, travel industry, et cetera, all of those are going to be extremely cautious to come back. And that is a bit of an issue and a problem, because when you look at the major Western developed economies, and look at services as a percentage of overall GDP, you're essentially looking at something like 70 to 80% of those economies accounted for by services. So if that's coming back slowly, then the overall economy is coming back slowly.
Nick, let's talk about what this means for foreign exchange. If everyone gets a chance, just pull up a chart of high yield spreads and compare it to the US dollar since we bottomed out in March. High yield spreads blew out aggressively through this crisis. Then we had this correction where we tightened aggressively about halfway, trimmed about half of the losses in a really, really short amount of time. And it was a similar story in the FX market as well, Nick, and I found it fascinating. The dollar blew out along with spreads because everyone wanted to buy the dollar and get to the greenback. And then we corrected around about halfway. And since then, over the last month or so, we've just been zigzagging along on spreads and likewise on the US dollar as well. I know many, many people are eager to fade dollar strength, but we have just sat there stubbornly with a 100 handle on the dollar index, Nick. Can you just give us a little bit of color here? What's happening?
Yeah, I think there is still, a lot of confusion, uncertainty, and concern about what's going to be happening both with the pandemic and also with the economic outlook. And although the overall trend in, say, global equity markets and here in the US equity markets is higher, there is still, I think, more of a little bit of a back and forward. And, we have seen equity markets flatten out to some extent. So I think that's one reason why the US dollar has essentially flattened out. The yen is not really moving anywhere. Those two currencies are probably going to remain supported for the time being. But I think some of these other currencies, emerging currencies, commodity currencies, we need to be more confident that the markets have stabilized. They've done great in terms of the equity markets, but we need to be more confident that this rally can be sustained and more confident that we've reached the bottom of the global economic cycle and we're coming back relatively strongly before we continue to see perhaps that further decline in the value of the dollar.
Nick, over the years, you have owned the real interest rate story and the capital flow story of the international economy. What does it tell you now about the bottoming of international growth? What do you see in flow of big money right now?
Well, in terms of, cross-capital flows, generally we're seeing obviously quite a lot of capital flows out of some of the emerging markets. Asian equity markets are a good example, Latin American equity markets. Interestingly, if you kind of dig beneath the details and look at some of the capital flow details or the balance of payments details, there seems to be, long term at least, some movement into some of the European markets. Perhaps that's got to do with bond yields, but also previously at least the hedging costs. So buying bonds on a hedge basis in Europe definitely, probably a reasonable investment strategy. I think overall, I would say that the overall level of capital flows is down, but I think we're seeing a move away from emerging markets. And I don't know if we're seeing too much of a move into the US. I think we're seeing a little bit more of a move into some other economies, just looking at their capital flows data. But again, the reason I think that we're not seeing more sustained wholesale moves is just this uncertainty about, exactly how it's going to play out. And of course, Europe does still have its own political and economic risks, and maybe that's some hesitation about an even greater move into that region.
Yeah, putting it quite diplomatically there. I mean, Europe's got a huge problem right now, just as far as the diplomacy across various countries is concerned. Nick, really appreciate your time this morning. Nick Benenbrook there of Wells Fargo Securities, weighing in on the situation with the US dollar and the global economy. Your US dollar this morning advances 1/3%. The dollar index 100 on the dollar index. From New York, let's get you some headlines, some news worldwide. Here is Michael Barr.
John, Lisa, Tom, thank you very much. As the Trump administration tries to convince the public it's time to go back to work, it is dealing with a coronavirus problem of its own. Bloomberg's Martin DeCaro reports.
Now that 2 administration staff members have tested positive, the White House is scrambling to avoid becoming a virus hotspot. 3 top health officials begin the week in self-quarantine. On ABC's This Week, White House economic advisor Larry Kudlow sought to assure the public the situation is being brought under control.
Everybody wants to be safe. We're going to do the best we can. We'll follow the rules and guidelines of the White House medical unit.
After self-isolating over the weekend, Vice President Pence is expected to return to the White House today. His spokesman says the vice president has tested negative every single day. In Washington, Martin DeCaro, Bloomberg Radio.
Many Americans now leaving their homes for the first time since the lockdowns began, as most of the country takes further steps to reopen. 45 states around the nation are now easing restrictions, even as the number of new cases continues to rise in at least 15 of them. This weekend in Kentucky, churches held in-person services with spaced-out seating. However, in Castle Rock, Colorado, a restaurant was crowded on Mother's Day with few customers wearing masks. A case about the appropriate separation between church and state is taking center stage at the Supreme Court. The case involving 2 ex-Catholic school teachers and their former employers is one of 2 the court is tackling today. Another case this week includes high-profile fights over President Donald Trump's financial records. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John.
Michael Barr, thank you, sir. Thank you very much. Your headlines with Michael Barr. Here's your price action. Equity, futures, negative. The story in the commodity market, though, interesting in the last hour. This headline from the Saudis, Saudi Arabia to cut output unilaterally by an extra 1 million barrels a day for the month of June. Crude with a lift. We're now positive on the session on Brent and WTI. Brent advancing 1.07%. WTI up by 1.66%. So a little bit of a lift for the crude market. Remember, negative prices on the front month. Now WTI is $25.10. Huge turnaround in the last couple of weeks. Brent crude, $31.20, Tom.
No question about it. And really, in the last 12 hours, we've seen major steps by the Saudi government, the royal family, to stabilize their domestic economy.
Much more still to come as we look ahead to the week to come. Chairman Powell on Wednesday, retail sales in America this coming Friday. From New York, this is Bloomberg Surveillance Live on Bloomberg Radio.
NJIT, New Jersey Institute of Technology, makes innovation happen. NJIT faculty mentored Christoph Camacho when he was a student, helping him co-found a startup and patent a device that uses drone technology for reforestation and to collect valuable data for land management.
I founded Paratrees back in 2016, taking what I learned from my research at NJIT and migrating it to a startup. Our technology is to really enhance land management operations, so we work very closely with land management companies. So we have a drone that performs precision reforestation, and we do storm damage assessment, having access to drones that can collect data so it's much faster. And what is more important, we help them drive management decisions. NJIT has been there every step of the way, going full force with my company.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
Influential conversations from...
Did somebody say just eat?
Me, get delivery like a G. See, hungry dogs gotta eat. I get mines every day, every week. Chicken wings to the crib, I'm sitting in. Burger in the low. Hope they put the pickle in. Wonton on a catamaran. Oodles and noodles, thank you, my man. JUSTEAT.
Somebody say just eat.
The garden tools that mean you can grow your own. The fire pit that turns tea time into an alfresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the U-Switch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stock index futures are retreating alongside European shares as investors weigh the latest moves around the globe to relax restrictions for the coronavirus. Oil erased an earlier loss as Saudi Arabia announced it'll cut extra oil output in June. We check the markets every 15 minutes throughout the trading day on Bloomberg. Right now, S&P futures are down 32 points. Dow futures down 238, and NASDAQ futures down 75. The DAX in Germany's down 1.3%. 10-year Treasury little change, yield 0.68%. Yield on the 2-year, 0.14%. NYMEX crude oil up 2.4% or 60 cents at $25.34 a barrel. COMEX gold is down 0.6% or $9.40 at $17.0450 an ounce. The euro 1.0822 against the dollar, and the yen at 107.31. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. We turn to the great stimulus debate in Washington now, and I've said repeatedly over the last few months, I've been really impressed with how well the administration has worked with the Democrats to get significant bills over the line. The question for many people in this market, Tom, is how long does that unity last?
Yeah, well, it goes once, twice, and then there's the third time. John, you and I were talking about early May as being the time of the next discussion, and we're nowhere near that. We're past early May, folks, and now staggering into later May, looking for the next fiscal stimulus. It's good to get away from the 3 zip codes that we look at here in New York and possibly wander out to Indiana. Trey Hollingsworth is with the 9th District. This is the path from Indianapolis on down to Louisville, and of course encompassing the University of Indiana as well. Congressman, wonderful to speak to you today. How far removed are the Republicans of the House and the Republicans of the middle ground from the arch Senate conservatives that are there?
It's a great question. Look, there are many Republicans in the House that are concerned about the deficit, that are concerned about total U.S. debt. However, there is a strong push and a continued strong push from Republicans to find a pathway to build economic growth back. I mean, we saw a terrible jobs report on Friday. People want to ensure that those losses are temporary and not permanent, because the last thing we want to see right now is this exogenous coronavirus shock to the economy become a long-term demand crippling shock to the economy.
This is so important, Congressman. I really want to emphasize this. There's a belief out there that the 15% unemployment heading to Kevin Hass's 20% is located in the cities. It's where the viruses were. The president makes clear these are blue regions that he doesn't care about, etc. How have you seen the job economy in the 9th Congressional District?
No, it is not just in the cities. It is not just in blue states. I live in a very red state, and the job losses are real. I hear from families every single day that say, I thought I had a long-term job. I was seeing my wages grow up until just a month ago, and now I don't have a job and don't have prospects for getting a job anytime soon. And I think this is really challenging. Getting back businesses open safely while mitigating risk, getting back individuals to being able to purchase things for their families, for their futures, is hugely important. And that confidence has to start in Washington, D.C. That leadership has to start in Washington, D.C.
Representative Hollingsworth, you've been a small business owner. We've seen reports that the small business bankruptcies could rise to 40% of all of the companies in 6 months if the shutdowns continue. How concerned are you that the program put into place so far has been ineffective at staving off these insolvencies, as well as the subsequent layoffs that obviously are just escalating?
Well, I think you hit the nail on the head, which is how do we determine how effective this is? And the reality is the program was just designed to be a short-term bridge to opening up the economy again, a short-term bridge to enable firms to get back to hiring, get back to doing business as normal. If we are not able to get the economy open safely, if we're not able to hold down the level of infections and transmissions once we open up the economy, there isn't enough money in Washington to save businesses in the long term. This has to be a bridge to empowering the economy to get back to healing itself. That's the only way in the long term we can keep these businesses afloat, going, and expanding.
Congressman, help me understand this. From the debt perspective, what is the concern right now about the debt? Just specifically, what's the big concern?
Well, look, I think the big concern is the large amount of deficit that we're spending this year alone, and what that means from a long-term perspective on where rates go back to once they normalize. Look, it's hard to look at the 10-year today and say, gosh, there's a debt problem in the United States, right? But once interest rates begin to normalize, as we get back to a more normal-looking economy, the question is, will we be able to hold interest rates at an appropriate level, or will interest costs continue to rise in the U.S., pushing out and crowding out all the other important spending that we think is there, right? Research and development on future cures for diseases. A lot of that goes through NIH. Defense spending, all these things will be crowded out by larger and larger interest payments on our debt should interest rates return to their normal levels.
You think there could be a problem with debt sustainability in America? Is that something you actually worry about?
Well, I do worry about that, and I think the important thing is to worry about it before it becomes a problem. I think the important question we have to ask ourselves is, what are the changes we need to make today? What are the changes we need to make over the next year to ensure that we can put ourselves on a path of fiscal sustainability? This isn't a problem today, as you well articulated. This isn't going to be a problem tomorrow or next year. But ultimately, one goes bankrupt slowly at first, then suddenly. The key is to catch it in the slow phase, not in the sudden phase.
Representative, I want to make sure to understand what you're saying. Are you saying that we should not add some sort of effort to pump money into the economy at this point for fear of that future escalation of debt costs? Is that your argument here?
No, I think my argument is we have spent $2.9 trillion of Americans' hard-earned taxpayer dollars. Before we start spending more, We should ensure that the programs are effective, as you well asked earlier. We should ensure that we're solving the right problems. We're ensuring that these are the right programs to be able to get the economy back on its feet so we can normalize again. But I think the long-term question for Americans is we were already at a deficit of $1 trillion before coronavirus happened. How can we put ourselves on the path of sustainability, even outside of this large acute dip, so that we can see a brighter future for Americans and not hand down a mountain of debt to our grandchildren?
Congressman, we got a problem in Indiana. We thank you for listening out in Indiana today. Rachel from West Lafayette says we need to be fair and balanced. And she's not talking Democrat and Republican. She's talking University of Indiana and Purdue. So our next interview has to be about Purdue and a congressman from Purdue. Trey Hollingsworth, thank you so much. Greatly appreciated, from the 9th Congressional District.
Boiler up.
India. Very good, John.
I remember my March Madness.
My word.
Feels like so long ago.
I can't do that, Lisa. I can't do like covet, whatever the... What does Warwick say, John? I mean,
Warwick. What do we say in Warwick? I'm not sure.
Sports, boiler up.
Sport was a bit different at university in my day, Tom. You'd play in a football field around the corner from a supermarket or something.
Or a bar.
But yeah, there weren't the stadiums or something near to the pub. Something near to the pub.
There's
from New York. This is Bloomberg Surveillance Live on Bloomberg Radio.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
This is a blue.
Sick of this. We're gonna do this doggy style.
Did somebody say just eat?
Me, get delivery like a G. See, hungry dogs gotta eat. I get mines every day, every week. Chicken wings to the crib, I'm sitting in. Burger in the low. Hope they put the pickle in. Wonton on a catamaran. Oodles and noodles, thank you, my man. Tacos to the chateau. Please, did somebody say
just eat?
Private jetting in the night sky. My man hand glide by with my fried rice. Right? What could you not love? Bought a slice on the side of the hot tub. Ooh, what you gonna do, boo? Chocolate fondue right on cue. Even dipping in the sea. I see food, seafood sees me. J-U-S-T-E-A-T.
Somebody say just eat.
Switch on Acorn TV, the brand new streaming service featuring world-class TV from Britain and beyond. Watch exclusive premieres like the colourful crime drama Queens of Mystery.
Once you have eliminated the impossible,
Whatever remains, however improbable, must be the truth. And fan favourites like Inspector George Gently.
I'm just an old copper doing his job.
If you love drama with a little mystery thrown in, enjoy 30 days free with code ACORN30. Then just $4.99 a month. No adverts, no contract, cancel anytime. Join online today at acorn.tv.
From the Bloomberg Interactive Broker Studio in New York, Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we are live on Bloomberg Radio, 1 hour away from the opening bell with equity futures at session lows and down a little more than 1%. We are negative 32 points on the S&P 500. In the bond market, we've talked about the debt issuance still to come through the week. 3-year notes come today. We get some 10 years after that and 30 years later in the week. In your bond market right now, yields down a single basis point, a 10-year to 0.67%. Tons of data as well through the week, Tom. CPI tomorrow. Claims, of course, come Thursday. Then Friday, retail sales in America.
I go back to claims and then on to the retail sales statistic, which will be absolutely key, John. You really look, John, at retail sales and just what I observe walking down the streets of New York. Where are the retail sales?
Well, no one's open, Tom.
No one's open, yeah. Just all there is to it. Let's get right to it. Michelle Meyer with us with Bank of America. Michelle, I want to rip up the script and do something completely different than I normally would. I was thunderstruck at how economists this weekend adjusted the jobs report forward aggressively. Usually they can guesstimate it or tweak it. What did Bank of America do to extrapolate out to May, into June, and even into July? Did you get out well over 20% is a solid forecast?
So certainly we think the unemployment rate will tick up further next month. But we think in terms of the rate of job destruction, in terms of non-farm payrolls, last month was the worst. April was by far the worst. So, a rough estimate, if you look at how claims are trending thus far, which is a really good leading indicator of what we're going to see for total jobs lost in the month, we can see somewhere in the order of about, 6 to 7 million decline in May. So if we see that and we assume, some kind of trend like labor force participation rate numbers based off of what we had from last month, the unemployment rate probably will tick up a bit, probably flirting with 20%, but I actually don't think we'll get above 20%.
Michelle, do we have a good understanding now of the depth of the downturn to establish forecasts about the shape of the recovery? Because over the last month, we've seen so many people willing to look through the current data. And what I've grappled with is how can you establish any kind of forecast about the future without a deep understanding of where we are at the moment, the depth of the downturn?
Yeah, absolutely. So the way that I've been thinking about this is that it's very helpful to break this into 3 phases, this trajectory into 3 phases. The first one is the shutdown. It was extremely painful, but it is largely over. That ended in the beginning of April. The second phase is the transition phase, which is when you start to see some reopening, but the shock that started in the consumer multiplies more broadly through the economy in terms of the decline in investment, the decline in housing. You see the ramifications of this aggressive amount of job destruction and consumer spending decline. That's the phase that we're in right now, this kind of transition period. And then the third phase is the recovery. And that's really the most uncertain, and that's where you can have, quite a number of different scenarios, largely dependent on the trajectory of the virus.
Michelle, I'm struck by the disparity in who got hit hardest so far. It is the most vulnerable workers. It is the people with the least education and the lowest wages, wiping out a lot of the job gains, both in a substantive as well as a quantitative determination since the beginning of the last crisis. I'm wondering how much that's going to color the recovery. In other words, what are the longer-term consequences of the fact that the most vulnerable populations are getting slammed harder than anybody else?
Sure. So, if you look at the breakdown of job loss between last 2 months, 38% was in leisure and hospitality. And Lisa, to your point, those are workers that tend to earn less and more considered lower skilled, lower wage workers. So what are the ramifications? Well, if you assume that leisure and hospitality is going to take a whole lot of time to come back, and it may not ever return to the pre-COVID levels, given some of these structural changes that we're likely to see in the economy as people learn from this pandemic experience, we're going to have to do a lot of job retooling, job training, figuring out how to redeploy this labor. And it could end up being that you have a lot of workers or a portion of the labor force that are somewhat displaced until they can figure out how to get back in with a new skill set. It was somewhat akin to what we had seen during the housing crisis when you had a large portion of construction workers that were displaced for a period of time, given the nature of that shock.
Well, so people are focusing on this and saying the higher paid jobs are remaining intact. I'm just wondering, how worried are you about a second wave of job cuts that some people are talking about in the higher earning brackets as this goes on?
Yeah, I mean, it's interesting. Yes, the pain was driven in the lower end of the income spectrum, but it's broad based. When you have this degree of job cuts, it is across every industry. 95% of the industries in the last jobs report saw some decline in jobs. 10% of the job loss in the last 2 months was in professional and business category, which is a pretty broad category, including many high-skilled jobs. I would argue that already is somewhat broad-based, just given the nature of the number of jobs that were lost. But to your point, yes, the initial shock was in the COVID-sensitive sectors, leisure, hospitality, retail. As you see this recession multiply and kind of work its way through the economy, and that would be a function of the income loss, people not spending as much, companies realizing the challenges that lie ahead. You could see, continued jobs cut, and that would be more the typical recessionary response, right? The first order was the lockdown, the extreme loss. That second order is more of that typical multiplier.
What's the first and second order of the price of a home? I mean, Michelle, this is your claim to fame. Tell us what you expect in the housing market nationwide, and for that matter, in the 3 zip codes we live in New York. I mean, do you just assume housing prices decline?
So housing to me is very interesting in this cycle because it is highly unlike what we had seen in the last cycle. So housing this time around is the victim. It is not the culprit. Housing will weaken, in my view, as a result of the extreme decline in economic activity and the income loss and the job loss. But because the housing market entered this cycle without very much excess, mostly that excess in terms of housing stock and excess in terms of leverage, it's not nearly as vulnerable to a correction. And on top of that, you've seen a government response already pretty aggressive in terms of trying to underpin the housing market with forbearance plans. So that the Fannie Freddie mortgage holders can take forbearance up to 12 months, that makes the rate of foreclosures much, much lower. So all that being said, I think that housing will soften. Certainly, home sales are falling sharply already. Housing starts are going to fall very sharply. You can see those numbers down 50-60% from the peak, given the cyclicality of housing. But once you start to see some recovery come back, those numbers will come back quickly as well. So it's very much going to follow the broader cycle. For home prices, nationally, we're looking for, somewhere around 2-3% decline on a year-over-year basis, with very deep bifurcations in the market. So if you're in big urban centers, clearly the outlook looks more problematic. If you're more in the outskirts suburbs, it looks
John, let me translate that for you. What Michelle's saying is that 3-bedroom, 4-bath thing you're looking at over the river there.
Yeah, right.
With the view, it ain't going down in price.
I think we'd love that. And a roof terrace and a gym. I'm sure we'd all love that. Every time Michelle comes on, she preps for housing because she knows you're going to ask her about housing.
She's the best.
Every single time.
She's the best. She's the rock star housing.
We have history talking.
I know you do. Before we round things out, can this be the quarter that we stop annualizing GDP?
No, because then you won't get these extreme numbers if you stop.
How useful is that to annualize GDP in a moment like this?
Look, I think you just have to, I think you continue to annualize it because that's the way we always look historically at GDP. And the reason historically you would do that is because otherwise you end up getting these very small numbers if you don't annualize it. So annualizing gives a much better perspective of the trend. Obviously today, annualizing, you get these aggressively large numbers. So to me, it's important to put these numbers into perspective. Let's say we get a 30% annualized decline. Talk about it in terms of the quarter-over-quarter annualized. Talk about it just the quarter-over-quarter change unannualized. Talk about it in terms of the year-over-year change. Just look at a variety of indicators, in my view.
Yeah. What are you looking at late in the week? One more question, Michelle, not on housing. Retail sales, claims, which matters the most? Which is the most valuable?
So I would say, claims continue to be really high up on the list in terms of being able to track the trajectory for the labor market. And we have been seeing a pretty steady deceleration in the rate of claims, which is quite nice. So we're looking for 2.8 million. Obviously still aggressively high, but, it is coming down, and it's steadily coming down from the peak, which shows you that healing in the economy, although, a modest healing only. The retail sales numbers, obviously very important as well. That would be for the month of April. We already saw a pretty sharp decline in March, and that was the March numbers were driven just from the last 2 weeks of March falling dramatically. So the handoff into April is really, really poor, and that's going to bring retail sales down as well. So expect a pretty ugly number there.
Michelle, always great to catch up with you. Thank you for joining us on housing, the labour market, and the broader economy. I thought everyone wanted to live in the suburbs now, Tom. No one wanted to live in the city. I thought that was a new thing.
That's actually a really good question. I don't know where that trend is.
Seeing. That's what we're seeing in the data.
Is that what's happening with the Abramowitz household? The kids want to move out, get out of the city.
I mean, maybe they wouldn't tell me that. we're bound, but I will say that you are seeing that in the data with rentals and an increasing number of people. Look at the Airbnb costs to get out of the city right now.
Oh, they're expensive. I haven't even looked.
Oh, yeah.
I know some people that have moved out of the city and rented a house, and they said it's very, very expensive at the moment just to get out.
Yeah.
New York problems. I know. There's much bigger problems out there too. Equity futures this morning, they are negative. Let's get you some news, some headlines worldwide. Here is Michael Barr.
Thank you very much, John. Lisa, Tom, additional measures are being put in place in the West Wing after 2 aides at the White House tested positive for coronavirus. It is said there are no plans to keep President Trump and Vice President Pence apart because of a concern that they both contract COVID-19. One top official, economic advisor Kevin Hassett, admits it is, quote, scary to go to work. The United Kingdom is introducing a new system to follow the coronavirus. The UK will now use a COVID alert level to guide public policy. Prime Minister Boris Johnson explained in a televised broadcast one measure that will be in place for the foreseeable future, a mandatory quarantine for anyone flying in.
To prevent reinfection from abroad, I'm serving notice that it will soon be the time, with transmission significantly lower, to impose quarantine on people coming into this country by air.
A South Dakota Sioux tribe has rejected the governor's ultimatum to remove checkpoints on state highways within tribal reservations or risk legal action. Cheyenne River Sioux Tribe Chairman Harold Frazier responded when asked if they will defy Governor Kristi Noem's order.
We have to. I mean, this is all we have is prevention. Because if we ever get the virus spread throughout a reservation, we don't have the resources, the medical resources to try to address it. Only 8 house-built beds, and definitely don't got the staffing or things like that to truly help anybody.
In the news release last week, Frazier told the governor the purpose is to save lives rather than to save face. And veteran comedian Jerry Stiller has died. He was a hit in Seinfeld and The King of Queens. He died at the age 92. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John.
Michael Barr, thank you, sir. Thank you very much. My family was watching Prime Minister Boris Johnson deliver that address yesterday evening, and when it finished, my mom texted me immediately and just said, did anyone understand that? And that's the problem, Tom. As they reopen and tell you how they're reopening, very few people in society understand what is actually going on. Does it mean you still stay at home?
Does your mother watch President Trump's press conference?
She watches them daily from New York. This is Bloomberg Radio.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. We'll keep an eye on some housing markets to slip way more than others as the pandemic takes its toll on home sales.
There are some markets that could be more concerning than others.
Drew Redding is analyst for Bloomberg Intelligence.
Two that we highlighted in one of our notes was Orlando and Las Vegas.
And Redding says there's a likely reason why those two metros are showing signs of a slowdown.
We looked at search trends for interest in new homes. We find that the largest declines were actually in Las Vegas, down 32%, and Orlando, 16%. And we think that has a lot to do with the type of employment that you find in those markets, which is heavily reliant on tourism and hospitality.
Redding says before the pandemic, the housing market was well positioned for an extremely strong spring selling season, but now all bets are off. But he also says after getting hard hit by the pandemic shutdown, builders are saying they are seeing a pickup in demand that started in the second half of April. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE SIPC.
Connecting decision makers to a network of...
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the Uswitch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
For more than 20 years, Asda supported our communities. We've raised over £23 million for Fair Share and the Trussell Trust. And recently, we've donated supplies to frontline NHS workers and carers. We've always been proud to serve those around us. Visit asda.com/creating change for better. Asda, we're all in this together.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
At Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are retreating alongside European shares as investors weigh the latest moves around the globe to relax restrictions for the coronavirus. Oil erased an earlier loss as Saudi Arabia announced it'll cut extra oil output in June. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down 36 points. Dow futures down 288. NASDAQ futures down 87. The DAX in Germany is down 1.5%. 10-year Treasury up 3/32, yield 0.67%. Yield on the 2-year 0.13%. NYMEX crude oil is up about 0.2% or 4 cents at $24.78 a barrel. And COMEX gold is down 0.33% or $5.60 at $17.0830 an ounce. The euro 1.0819 against the dollar. British pound 1.2290. And the yen is at 107.41. Dean Kernot at Macro Risk Advisors tell Bloomberg Surveillance that with things moving so fast, investors should consider a classic hedge.
We're kind of in no man's land, and so I'm just continuing to recommend to folks to really take a hard look at gold.
In April, Bank of America raised its 18-month gold price target to $3,000 an ounce. And watching shares of AMC this morning at more than 71% after weekend reports from the Daily Mail suggest Amazon is thought to have held talks about a potential takeover of AMC. And that's a Bloomberg Business Flash. Tom and Lisa.
Karen, thanks so much. Lisa Bramos and Tom Keene. Thrilled you're with us this morning. And right now, we want to really nail down what everyone's talking about. And that is, of course, reflation. The idea of aggressively imputing a new inflation is sort of arbitrary. It's really not in the economic textbooks. Then there's inflation, which we all know. We've all lived. And then there's lesser inflation. That's called disinflation, DIS. And then there's this gloomy thing from Europe in another time past, early Eisenhower, outright price decline, deflation. No one owns this territory like Gary Schilling. We're thrilled that Dr. Schilling could join us right now, writing his wonderful newsletter. Gary, you said there's good and bad deflation. In a pandemic, is there good or bad disinflation and good and bad deflation?
Well, good inflation is like you've had in times of tremendous productivity growth. That happened in the latter part of the 19th century, and again, actually in the 1920s, when basically supply outruns demand, and so prices decline. Bad deflation is a result where demand is destroyed, demand goes down more than supply, and I think now we're more in the latter. We're more in the bad deflation because we're the supply, particularly on a global basis, has not diminished that much, but demand certainly has dried up, at least for now.
With all the monetary, central bank, and fiscal action, and even more action to come that we've seen, does that exacerbate these price change moves? Does it make for a greater disinflation?
Well, I don't know if it does that, Tom, but it certainly is disruptive, and I think you have to consider that all this monetary and fiscal stimuli is really not doing that much. I mean, you look back at what happened after the 07-09 recession. The Fed went into massive quantitative ease, and what happened? We had the slowest economic recovery in the post-war period. Yeah, the money went into stocks, but it didn't go into spending and investing. And I think you have the same thing now. We also had massive fiscal stimulus back then. So these you're fighting against tremendous forces. I think we're dealing with the greatest shock to the world's economy since World War II, and in terms of disruption and the length of time it's going to take to get reoriented.
Gary, that's exactly where I wanted to go, especially given your credentials as one of the top-ranked economists out there by a number of places. You wrote in a recent column for Bloomberg Opinion that you think that people are getting a little ahead of themselves and that we're headed toward something more akin to the 1929 market crash and the early 1930s Great Depression. Where are so many economists? I'm thinking of some houses, Morgan Stanley, Goldman Sachs, that are looking for a U-shaped recovery or even a V-shaped recovery, saying that we're going to see a big rebound in the latter half of 2020. Where are they wrong, in your view?
Well, I think their likely error is that they are assuming that business and consumer spending revive a lot faster than I think. You've had the disruption to supply chains. You've had a whole change in the way people behave. Yeah, okay, people aren't going to stay at home forever, but I think they're going to be a lot less likely to come out. We don't have anything like a vaccine that's going to ensure people that they're not going to get COVID-19 when they do go out. And of course, when you look at the disruption of supply chains and the realization that we were relying on China for a lot of basic pharmaceuticals and so on, to work all this out and expect a V is unlikely. And also, at least the history is that any time you've had over 30% decline in the stock market, it's never ended in less than 6 months. That's history. Doesn't mean it can't be a V this time, but I think it's highly unlikely.
Well, what do you say to the arguments that this time the fiscal and monetary response has been unprecedented both in its scope and its speed? Does that change the equation?
Well, it might, but as I just mentioned, we had the same thing in response to the Great Recession, the 07-09 decline. Massive. The Fed and other central banks knocked the rates down to zero. Then massive quantitative easing. Then we had fiscal stimuli that was the extent of 6% of GDP. Yeah, things are bigger this time, but this is a bigger shock. Bear in mind back then that was a shock to housing, but people's lives were not disrupted. Now, of course, if you were somebody who was way out on a limb with a subprime mortgage, you were in trouble. But most people had a little effect. But this affects everybody. So to say that you've had much more monetary and fiscal stimuli, yeah, but you've had a much greater problem. And in my judgment, it still does not simply mean that things are going to turn around on a dime.
Gary Schilling, thank you so much. Gary Schilling with A. Gary Schilling, and of course his wonderful, lengthy, I should say, newsletter, almost a monograph when he puts it out. Lisa, I walked in the door here from the East Wing to the West Wing at the surveillance studios.
At Shea Keen.
At Shea Keen, and it was green on the screen. It's not anymore. Futures negative 36. It's been a really rather abrupt reversal.
Yeah, I think sentiment's really driving the mood right now because we already got the unemployment report, absolutely horrendous, historic, but we were expecting that, and the focus now is on Washington, D.C. and what they'll do. I am struck by this complete lack of consensus when it comes to what the outlook will look like, and yet the complete consensus and faith in the stimulus that we've gotten so far.
That's true, but the consensus foreign folks over the weekend was an adjustment of the unemployment rate south. Kevin Hassett, of course, made a big splash on the Sunday talk shows talking to 20% statistic for the administration. Yeah. But a lot of people are beyond that. Futures negative 35. Dow futures negative 287. The VIX, three big figures, 31.17. Stay with us. This is Bloomberg.
Have you wanted to...
Sick of this. We're gonna do this doggy style.
Did somebody say just eat?
Me, get delivery like a G. See, hungry dogs gotta eat. I get mines every day, every week. Chicken wings to the crib, I'm sitting in. Burger in the low. Hope they put the pickle in. Wonton on a catamaran. Oodles and noodles, thank you, my man. Tacos to the chateau. Please, did somebody say
just eat?
Private jetting in the night sky. My man hand glide by with my fried rice. Right? What could you not love? Bought a slice on the side of the hot tub. Ooh, what you gonna do, boo? Chocolate fondue right on cue. Even dipping in the sea. I see food, seafood sees me. JUSTEAT.
Somebody say just eat.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
For more than 20 years, Asda supported our communities. We've raised over £23 million for Fair Share and the Trussell Trust. And recently, we've donated supplies to frontline NHS workers and carers. We've always been proud to serve those around us. Visit asda.com/creating change for better. Asda, we're all in this together.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
At NatWest, we're putting our money where your business is. We've set aside £5 billion of working capital funding for our customers and have already lent over £3 billion to businesses like yours. So if you bank with NatWest and COVID-19 has affected your business, remember, every one of us is here to support you. Search NatWest Business Coronavirus.
Figures for RBS Group. Security may be required. Over 18s only. Subject to status. Business use only.
Helen is dreaming of fighting a flock of 40-foot flamingos. But in reality, she's helping fight COVID-19 in her sleep. Like thousands of others, she's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments. I'll fight you. Keep fighting, Helen. Search Vodafone Dream Lab and join the Dream Team tonight.
Dreamlab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
Losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeart Radio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
There's no other way to say the world economy is in awful shape.
Whether it's a few months or 18 months, eventually it will come to an end. The economy will revive.
Finance.
Many people take the Fed to task. I think the Fed should be applauded.
We only have limited tools. It's up to the fiscal authorities to do something about it.
Investment.
In a couple of years from now, things are going to be back to probably where they were at the very beginning.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, Bloomberg Surveillance, on this Monday after a most historic jobs report and the work over the weekend by economists. So I'm not going to mince words. It was grim about the 30 days forward on the American labor challenges of the market. Certainly, we've seen buoyant stocks, but we see a pullback this morning with the VIX out 3 big figures, which shows you the risk-off feel of the last 3 hours. Bloomberg Surveillance this morning brought to you by Cohn-Resnick Advisory Assurance Tax. Cohn-Resnick can help your business mitigate disruption and mobilize for the future. Visit their coronavirus resource center today, cohnresnick.com/COVID-19. Paul, just to kick it off here, your observation, your weekend reading, your view forward on the equity markets.
Yeah, it's interesting, Tom. I think the market clearly is trying to digest what we saw on Friday in terms of the jobs number. And a couple of things, Tom. I think it's a question of how much worse will it get in the near term? And then the question becomes, this whole reopening of the economy, there doesn't seem to be a national or a federal plan to it. It's more of a state by state or region by region, if you will. And I think people are looking to states like Georgia who've started early, maybe even Florida, and then we'll think about New York region over the next several weeks, but it's just a question of how that's all going to play out and what it means for the economy going forward.
We say good morning, Sirius XM Channel 119, and of course all of you on our digital products, plural. In Indiana, we talked to Trey Hollingsworth, of course, of the 9th Congressional District, from Indianapolis down to Louisville, and Paul, that's exactly what he said. The nuances just of his congressional district alone, really extraordinary. One of the nuances over the weekend was the primal scream from one E. Musk. He is a chief executive officer of a small auto company.
Tantrum.
And he's got the moving, he called beacons, he's got the moving vans out. Yep. David Wilson joins on the electric car company. David.
Well, Tom, Musk is talking about moving Tesla's headquarters and manufacturing out of California. That's where their lone production plant is. They can't get work restarted there because of coronavirus-related curbs. And on top of that, the electric car maker filed a lawsuit in an attempt to restart production. You put that all together, and Tesla's shares are down 2.5%. in early trading. Travel stocks taking a bit of a hit, notably Marriott International down 3%. The hotel operator had a first quarter profit that trailed estimates, and while revenue beat projections, Marriott said a sales gauge plunged in April by 90%. So you look across the group, you see casino stocks down, Wynn Resorts, MGM Resorts off about 3%. You look at the airlines, American down 3%, Delta down 2.5%, United down 3%. Similar story with the cruise lines, Carnival's off more than 2%, Royal Caribbean down almost 3%, and Norwegian lower by about 3% as well. On the plus side, you have Coty up 13%. The cosmetics maker agreed to sell a majority stake in its professional beauty business. We're talking about the hair care brand Wella, among other things, to private equity firm KKR for $4.3 billion, including assumed debt. In terms of the deal, also call for KKR to invest $750 million in Coty. You got General Mills up 1.5%. The maker of cereal and other foods raised this year's sales and earnings forecast to reflect growing demand from consumers staying at home. Health is up 7.5%. The drug distributor reported fiscal third quarter earnings and sales that beat analyst average estimates in a Bloomberg survey. Cardinal Health reaffirmed forecast for the year and raised its dividend. Mylan's up 3.5%. The generic drug maker reiterated full year projections after posting first quarter results. Under Armour, on the other hand, is down. It's one of these companies with two classes of publicly traded shares. The voting shares, ticker UAA, taking the bigger hit. They're down almost 10%. The athletic wear maker posted a wider first quarter loss than analysts expected amid the slowest sales in about 5 years. You've got Macy's actually lower by about 0.75%, even though a Czech billionaire, Daniel Kretinsky, disclosed a 5% stake in the department store owner. Now, the purchase was made by Kretinsky's Vesa equity investment, which became one of Macy's top 5 shareholders. And on the deal front, you've got AMC Entertainment, the most active stock in early trading, up about 64%. Now, Amazon.com is thought to have held talks with the movie theater chain about a takeover. That's according to the UK's Daily Mail. The report cited unnamed sources and said it isn't clear whether the discussions are still active. That said, AMC shares taken off here. And up even more, you got a company called Myocardia, higher by 87%. Yeah. The drug developer's proposed treatment for a rare heart condition met the goals of a late-stage study.
The Coty thing you did. What was the Coty news? What is
KKR is buying their professional beauty business?
Just so you guys understand, and it's a quarantine and the kids are miserable and all that. Afterthought goes out. She goes down to the local corner drugstore. I think she's writing a check directly to Henry Kravis. I mean, the amount of makeup that's coming out of that store, no doubt all of it Coty brand. I'm sure of that. But, Paul, it's just absolutely incredible. She said, "Who's Mr. Kravis?" And I said,
right. We know who Mr. Kravis is, but she does not.
She's writing the check directly out to Coty and Mr. Kravis this morning.
Bloomberg Stocks editor Dave Wilson, thank you so much for that. We appreciate it. Tom, so, as we think about the economic impact from the pandemic and, how companies are responding, we're seeing a lot of companies really focusing on their balance sheet, really focusing on liquidity, being able to pay the bills. The question is, what do you do about your shareholders? Do you pay your dividends or do you pay your employees? How do you think about the cash? So we think about Arthur Levitt, former chairman of the Securities and Exchange Commission, and, of course, a Bloomberg LP board member. So, Mr. Levitt, when you think about companies today, they're really thinking about, what do I do with my cash and my liquidity? Who do I pay? How do I conserve it? Do I pay my employees? Do I pay my shareholders? What do you think companies are doing right now? What's the focus?
I think the focus of the lion's share of dividends is going to higher income Americans. About 69% of all dividends goes to taxpayers with incomes in excess of $200,000. And cash distributions so far this year are $192 billion, up slightly more than 1.5% from the same period in 2019. But distributing millions of dollars to shareholders while leaving many workers without a paycheck is considered by a lot of critics of the business community as being really unfair. And it kind of belies the statement from executives about their concern for employees' welfare during this coronavirus crisis. An example of that is Caterpillar, which announced a $500 million distribution to shareholders about 2 weeks after indicating that they were closing operations at a number of plants.
I mean, Arthur, this is really important. And what is your reading of what corporations used to do? There was a time where the ratio of CEO pay was not as extreme. You know, we know all the incentives of capital gains treatment and share treatment and the way people are compensated today. If there had been a pandemic when you were running the American Stock Exchange, how would have Wall Street and corporate America reacted?
I think that in that era, corporate America was more concerned with their image than they are today. I think that was the era of care about liability for mistreating the public. That was the era when the Business Roundtable and the American Business Conference for smaller companies were very concerned about how the public saw them, much more so than the present environment.
So, Arthur, we are seeing, executives across various industries kind of, giving back or taking pay cuts. Is that something that is real, or is it just kind of just lip service?
Well, I think it's real, but how much of that really balances off with the fact that dividends are going to higher income Americans, and 69% of all dividends going to taxpayers who have incomes in excess of $200,000. I think that's where the balance is. Only 48 companies have discontinued, cut, or omitted their dividends.
Arthur, stay healthy. He's a former chairman of the Securities Exchange Commission. Arthur Levitt, Bloomberg LP board member as well. With our news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. A leading model has increased its U.S. coronavirus death toll projection again as governors continue lifting measures toward a reopening. The model from the Institute for Health Metrics and Evaluation at the University of Washington now forecasts more than 137,000 Americans will die by early August. Experts say that rise is largely due to Americans moving around more. Ohio is allowing most retail to reopen tomorrow. Lieutenant Governor John Husted.
We learned a lot from going through the first 8 weeks of this on how to keep people safe. Many businesses were open. We will require 6-foot distancing. We will require masks in many cases. Also disinfecting. There are going to be very stringent rules for how we go back to work and how we act as consumers. And as that begins to open up, we will open up the Ohio economy, but we also keep in mind that we want to keep people safe as well.
Husted says there are risks no matter what his state does. Comedy veteran Jerry Stiller, who launched his career opposite wife Ann Mira, has died. Stiller played the hysterically high-strung Frank Costanza on Seinfeld.
Kramer made a pass at me.
Kramer made a pass at you? You're crazy.
I'm not crazy. He stopped short and made a grab.
He stopped short? That's my move. I'm going to kill him.
Stiller was also in the hit sitcom The King of Queens. His son, Ben Stiller, announced on Twitter that his father died of natural causes at age 92. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul.
Michael Barr, thank you so much. We appreciate that. Jerry Stiller, Tom, that's big. I mean, the Festivus for the rest of us.
It is for our global audience. It is the fabric of this city. And whether it's Tom's Diner up past Columbia University, good morning, Suzanne Vega, or all the other images of that show in this city, it's truly part of the fabric of the city.
That's right. At a different time, at different place. It just feels like right now. Tom, let's get a quick data check here as we try to get this market open over the next 17 minutes.
Paul, I got good news. It's raining now. It's not snowing.
Yeah, it's not exactly. We were driving through the snow on Friday. It was just extraordinary on May 9th or whatever it was. The S&P down 32 points, Tom. We have the Dow down about 266 points. That's 24,000. Let's call it 0.15 on the Dow Jones Industrial, keeping that 24,000 level. NASDAQ down about 0.8%, 75 points, 91.42. Bonds pretty much unchanged right here. Oil up just slightly, $25 a barrel. Let's call it. This is Bloomberg.
President of the Jewish Communal Fund, Zoya Raines, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up to date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Influential conversations from Bloomberg Television.
Did somebody say just eat?
Me, get delivery like a G. See, hungry dogs gotta eat. I get mines every day, every week. Chicken wings to the crib, I'm sitting in. Burger in the low. They put the pickle in. Wonton on a catamaran. Oodles and noodles, thank you, my man. JUSTEAT.
Somebody say just eat.
The garden tools that mean you can grow your own. The fire pit that turns tea time into an alfresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stock index futures are retreating alongside European shares as investors weigh the latest moves around the globe to relax restrictions for the coronavirus. Oil erased an earlier loss as Saudi Arabia announced it will cut extra oil output in June. We check the markets every 50 Minutes throughout the trading day on Bloomberg. Right now, S&P futures are down about 30 points. Dow futures down 246, and NASDAQ futures down 70. The DAX in Germany is down 1.1%. 10-year Treasury, little change, yield 0.68%. Yield on the 2-year, 0.14%. NYMEX crude oil is up 0.7% or 18 cents at $24.92 a barrel. COMEX gold is down 0.4% or $7.20 at $17.0650 an ounce. The euro is at 1.0830 against the dollar. British pound 1.2336, and the yen is at 107.40. Chesapeake Energy discarded its full-year outlook and revived concerns it may fail hiring advisors to evaluate strategic alternatives that could include restructuring. And we continue to watch AMC, up 61% in early trading after weekend reports from the Daily Mail suggest Amazon is thought to have held talks about a potential takeover of AMC. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thank you so much. Paul Sweeney and Tom Keene, and what we try to do through this pandemic is speak to medical professionals. Major shout out Peter Hotez at Baylor, who was very active this weekend out on social media, educating all of us on vaccines, and that is certainly the hope for it, is to get to a vaccine, as we learned decades and decades and decades ago with something like polio as well. Right here we speak at the Johns Hopkins University, their Bloomberg School of Public Health, and of course that is Michael Bloomberg, the founder of Bloomberg LP, this radio and television operation as well, his philanthropy to his alma mater and engineering school at Johns Hopkins. But it goes much further than that. And one of their assets is Joshua Sharfstein. He is vice dean, and we caught up with him on the strange thing called this lockdown.
The ability to open retail safe depends on more than masks and gloves. Masks are really, a stopgap measure. How well they work isn't really as well known as we might think. So the most important thing is the ability to stay away from each other physically and have barriers between people, particularly like at cash registers, that would prevent droplets from spreading better than a mask would. So I think it's possible in some areas to do that. As cases are coming down, as we have more public health measures in place, as the hospitals are doing better. But it has to be done very carefully, and it's not if you just wear a mask and gloves, you're good to go.
Josh, how does contact tracing work? Is it the most effective tool we have right now?
It is a really critical tool, and the idea is we want to stop the virus from spreading from person to person without having to tell everyone to go home and stay at home. And so what you do is you find someone who has the coronavirus. Maybe they had a test and they're positive. You call them right away. You find out who they've been in contact with during their infectious period, which is a couple days before they started symptoms. And then you call them, you tell them that they may have been exposed and that they should quarantine themselves so that when they start getting infectious, there's nobody for them to give it to. That's the basic idea. And it requires a lot of people to do. I know New York is planning to hire something like 10,000 people. But if you can do it, and even if it's not perfect, you can really slow the spread of the virus.
Joshua Sharfstein of the Johns Hopkins University giving us an update, and we'll do that through the week as well. Paul, what I want to do now, if you don't mind, is to talk about share buybacks. And that, we saw Apple there, but I think of one of our wonderful guests, Mario Gabelli, talking with great heat that a share buyback is a return of cash to shareholders. Do it. And he's unabashed about it. And now there's a modest uproar about it. And it's one part, I guess, morally should it occur, but it's also about share buybacks and trying to game the top of the market. Don't do it. Or when shares are cheap, that's when you buy back your shares. Does anybody do that anymore?
I don't think, in my, history, Tom, in my experience, I think most of the companies that I've covered in my career, they've when they take a look at their free cash flow, the capital they generate internally, they think of a few things about how to deploy that capital. One is, can I reinvest it in my business and generate a really good return for my shareholders? That's the best thing you can do. If you've got nothing to invest in your own business, then it's a question of, all right, should I pay down debt to increase the value of my equity? That's something that they look at. And then if there's really nothing there, if they've paid down their debt, or if they're at a comfortable capital structure, they think about, what's the best way to return capital to my shareholders? Because I've got nowhere to invest it internally. I've paid down my debt. I've got my capital structure where I want it. I have literally no other use for it. So what's the most efficient way to return it to my shareholders? And that's usually some kind of mix between a buyback and a dividend. So, I mean, there are certain companies, certain sectors, certain industries, certain business models that have a high free cash flow type of business model, and that is a real issue. How do I really deploy my free cash flow for the maximum return of my shareholders? Now, some in industry, and some companies, they're not in that position. They're not really free cash flow positive.
That would be the airlines right now, right?
That would be the airlines right now. So then it becomes a question of just kind of survival here.
Yeah, okay, and to go to another theme here, Paul, and we can do this quickly here. We're going to get a lot of bankruptcies. Everybody understands that. Most of these bankrupt companies, am I right? They keep going.
Yeah, I mean, I think that's what we've seen, Tom, when you take a look at some of these, and we're going to see a lot more, as you just suggested, Tom, I mean, over the next several months and probably over the next year or so. But, the question is, do they have a good underlying business model, but perhaps just a bad capital structure? And so if you go through a bankruptcy, perhaps you can restructure your capital structure to make it more long-term oriented, and that's kind of what you hope for in a best-case scenario. Sometimes you just have to, unfortunately, just liquidate.
Well, you liquidate, but a lot of these companies have a lot of debt. Some have some debt, some have more debt, some have a lot of debt. Okay, fine. The debt goes away, right?
Yeah, the debt goes away, and it gets converted in most cases into an equity stake into the company. And the question usually is, if you're a creditor, is what is my recovery? Do I get 10 cents in a dollar, 20 cents in a dollar?
10 cents, really. So if they invested $100 million, they're only going to get $10 million back.
10 million of equity, and who knows whether that equity will be worth anything 6-12 months from now. So that's that's why equity is soft and credit is hard. It's if you're a creditor and the business goes south, that's a real issue. So but that distressed debt market is going to get a lot more active, I think, Tom.
A little distress in the market today as well. 3 big figures on the VIX, and of course that was a huge close in the VIX of optimism on Friday. 30.88, rounded up to 31 if you're keeping score at home. 2.90 points. S&P futures negative 29, Dow futures negative 238. Still, Dow futures still above 24,000. That's remarkable. What I've seen in the last hour, yield, the 2-year yield, it comes in 0.1469. This is Bloomberg.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seizechange.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a Bloomberg Money Minute.
Did somebody say just eat?
Me, get delivery like a G. See, hungry dogs gotta eat. I get mines every day, every week. Chicken wings to the crib, I'm sitting in. Burger in the low. Hope they put the pickle in. Wonton on a catamaran. Oodles and noodles, thank you, my man. Justeat.
Somebody say just eat.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the U-Switch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
For more than 20 years, Asda supported our communities. We've raised over £23 million for Fair Share and the Trussell Trust. And recently, we've donated supplies to frontline NHS workers and carers. We've always been proud to serve those around us. Visit asda.com/creating change for better. Asda, we're all in this together.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
And good morning. I'm Karen Moscow along with Tom Keene and Paul Sweeney. And the opening bell is brought to you by SEI. Since its founding 50 years ago, SEI has provided investment managers and asset owners with robust infrastructure platforms and flexible outsourcing solutions. Go to SEIC.com/IMS. And the S&P 500 is lower at the open. It's down 0.8% on 23 points at 2906. The Dow Jones Industrial Average down 0.9% or 210 points at 24,122. And the Nasdaq's down 0.6% or 59 points at 9060. The 10-year Treasury up 1/32. The yield 0.67%. The yield on the 2-year 0.14%. NYMEX crude oil is up 1.9%, up 47 cents at $25.20 a barrel. COMEX gold down 0.4% or $6.60 at $17.0720 an ounce. The euro 1.0831 against the dollar. The yen is at 107.37. Tom and Paul.
Karen Moscow, thank you so much. We appreciate that. Tom, let's go across the pond right now and talk about equities, European equities. We can do that with Tim Craighead, Senior European Equity Strategist for Bloomberg Intelligence. He's been on the street for decades. He's seen a cycle or two. Tim, thanks so much for joining us here. So as you talk to your European institutional investor clients, are they just looking past the next couple of quarters and just focusing on 2021?
Totally, Paul. This quarter, the second quarter, 2020, are all basically considered throwaway years. You can look at this from the standpoint of valuation, which is super high on 2020 earnings expectations, like 2 standard deviations high. And as you look out to 2021, it's a much more normal 13.5, 14 times earnings right now. And that
basically tells you that the market is focused on 2021, not 2020.
I looked, Tim, at the narrowness of the market. You have been doing this for years. What does it signal that Paul Sweeney and Tom Keene want a portfolio with 5 stocks?
It's an interesting thing looking at the rally we've had, Tom. 2 things in particular jump out to me within the context of what you said about narrowness. Number one, this hasn't been a drop and a recovery in Europe like you've seen in the U.S., where, you're up 30% from the bottom. We're up 22, but if you miss the first 3 or 4 days, you basically have nothing. So
interesting.
That first couple of days was risk on cyclicals, energy in particular. Since then, it's been all on defensives. It's high quality, it's healthcare, it's growth. Think pharmaceuticals. Think high quality consumer staples. That's where the market lives. We haven't seen yet an inflection in cyclical earnings. We don't have technology every year like you have in the U.S. And until we see the inflection in cyclicals, I think it stays with high quality.
So, Tim, one of the things that's been certainly over here in the U.S., and I think globally, it's just been, in terms of the market rallying off of the bottom and retracing, call it half of the decline from the peak, has been the sense that the U.S. Federal Reserve is going to be there backstopping this market. Talk to us about how European investors view the ECB and its role in kind of trying to deal with the economic impacts from this pandemic.
Yeah, it's a really good question, Paul. I think one way you can think about this is to look at volatility. We've seen the V2X, which is our version of the VIX, right? We've seen the V2X drop from over 80 down to 31. If you look at the comparable period after or during the global financial crisis, the V2X stayed in the 40, 50, even 60% level for months. And the reason why we've seen volatility curtail the way that it has, which is quite supportive for valuation looking out to 2021, is all about fiscal and monetary policy initiatives, which, like you've had in the U.S., they're unprecedented and they're fast here. There's all sorts of ways you can complain about, this element or that element, and there's dissension within, elements of Europe from the standpoint of who's running hard and who's not and whatnot. But broadly speaking, there's been a lot of support. There's good support in terms of furloughed workers that, are keeping, consumer demand moving, which, is a little different construct than what you guys have here.
Tim Craighead with us, folks, and we're going to continue here with him, but I do want to change gears, Tim. I have to ask you about China. You have been known for decades as a great student of China. Give us your view now of the tensions domestically in China and how they link into the relationship that President Xi has with President Trump. I know you're not looking at this day by day, but you got to be studying it, Tim.
Yeah, well, thanks, Tom. Fond memories of being over there for quite a few years.
You were over there, but you lived it. I mean, the rest of us talk about it, folks. Mr. Craighead lived it.
He built our Bloomberg Intelligence business in Hong Kong, so let's not be modest here.
He did it out of the Mandarin Hotel bar. We all know that.
Exactly.
But other than that, Tim, give us an update on your view of China.
Yeah, I mean, look, I think it sort of keep it simple. They have an agenda to drive growth, to move more towards domestic consumption, and if I think about it from their perspective, this is a potential for Xi Jinping to actually implement some structural change that would have been difficult to have implemented, had we continued to be running on a normal course. And it's like don't waste a good crisis. I think they are trying their best to do as much as they can to make the structural shifts that they need to, and they have to, because at the same time, you've got a rest of world that is very likely to be making a de-Chinification move because they want to reduce the risk of being so dependent. So there is real conflict, but I do think China is, going to be the canary in the coal mine for looking, how do you get out of this? How do you open things back up? How do you get back to work? And, the show of what transpires from the standpoint of geopolitics, exports to the U.S. and elsewhere, are going to be an interesting show to watch while China tries to force the issue of domestic consumption and domestic growth.
So, Tim, give us a sense. We're starting to just hear, we're going to allow Tom out of his, apartment on the Upper East Side soon to go roam Central Park. But, Tim, give us a sense of kind of what life is in London right now as you guys think about it. I know Boris Johnson had a nationwide speech, I believe, Sunday evening. Give us a sense of what life is in London as you guys consider a kind of reopening.
Yeah, it's interesting, Paul, because I like to cycle, and going out on Saturday morning for a nice long bike ride from where I am in North London to Greenwich and back. I went over the Tower Bridge, and it was myself and my daughter, 3 other bikes, and 1 car. It's really quiet. Wow. And
that's stunning.
It makes for a great photo, but it doesn't do so much on the economic front. I do think that there is a lot of pent up angst to try to get back to business. There was an interesting story in the press today about 2 platforms being packed following Boris Johnson's speech, as you referenced, that was last night. And I think that's going to be the tension. There's a lot of eagerness to move forward like there is in New York, and at the same time, there's going to be the risk of second waves, and that's going to be that's going to be key.
Tim Craighead, you're not on enough. We got to get you on more. We got to get you up early. Tim, I think you really ought to get up. I'm thinking 4 or 5 a.m. London time, start the day strong. Tim Craighead, Bloomberg Intelligence. Always important to speak to him. Someone who never gets up early with our news in New York City. Here's Michael Barr.
Thank you very much, Tom. Thank you, Paul. It will be a busy week for President Donald Trump. His leading health experts on the coronavirus will speak from self-quarantine after they were exposed to White House aides who tested positive for the coronavirus. Also this week, the Supreme Court will hear arguments over access to the president's financial records. The White House is in no rush to pour more money into the staggering U.S. economy, and Republican lawmakers say they are concerned with ballooning budget deficits. Bloomberg's Martin DeCaro has more on the coming fight over another pandemic relief bill.
Another relief package is a matter of if, not when. That's the word from Senate Majority Leader Mitch McConnell, and Treasury Secretary Steven Mnuchin is talking about waiting weeks before acting.
Now, having spent $3 trillion, we're going to take a few weeks, see how this is working, and be considerate.
But with the unemployment rate exploding to 14% and state budgets imploding from the loss of tax revenue, Democrats are pressing for $1 trillion relief bill. They're pointing to a shift in economic thinking on the risks posed by deficits. Increased spending and lending after the last recession did not trigger the feared inflation. In Washington, Martin DeCaro, Bloomberg Radio.
Comedy veteran Jerry Stiller, who launched his career opposite wife Ann Mira and later as the high-strung Frank Costanza on Seinfeld, has died. One of the best-known episodes was his teaching the others about his own holiday called Festivus.
George, you're forgetting how much Festivus has meant to us all. A new holiday was born. A Festivus for the rest of us. I got a lot of problems with you people. Now, you're going to hear about it.
Stiller, who was also on the hit sitcom The King of Queens, was 92. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
And Michael, he wandered on to the Ed Sullivan Show just a few times as well.
That's right.
Stiller. Yes. And Paul, we don't say it enough. The husband and wife act was, at the time, critical. The tension between Jewish and Roman Catholic. It was just, now it's like, big deal. But back then, I remember as a kid, I was there to see the Beatles, but it was a legitimate constructive tension within comedy.
Yeah, it really was. And Tom, you mentioned the Beatles. How about Little Richard passing away over the weekend? I saw some, great photos of just, all the greats paying homage to Little Richard, Mick Jagger, Paul McCartney. I mean, just everybody.
Well, in particular Jagger.
Extraordinary.
The influence on Jagger on stage. And again, with Little Richard, it was so much the show. I mean, all these people have prodigious chops, but he's the one, he was the flamboyant's the only word for it. He just did it on stage.
Yeah, I was just flabbergasted, just kind of going through, Twitter and Facebook over the weekend, and just all the greats, all the bigs, just kind of saying how they were all influenced by Little Richard. So some great names passing over the past few days.
What we've got here in the markets, let's do that as we are wont to do on Bloomberg Surveillance. And the answer is it's turned around a little negative. We are open for trading. Maybe that's unfortunate. But S&P futures negative 16, Dow futures negative 200, 24,131 on the Dow, SPX above 2,900, 2912. And I'd really point out the VIX, which was up 3 big figures, now up 2 big figures. So the angst is not as angsty as an hour and a half ago, 30.03, round that to 30 even on the VIX. What I'm really watching is a 2-year yield has come in. That's profound this morning, 0.1489 on the United States 2-year yield. From New York, coast to coast, this is Bloomberg.
Looking out for a place to go.
This is a Bloomberg Pursuits look at luxury. High-end home prices in New York, London, Hong Kong, Vancouver, Singapore have dipped in the first quarter of this year, according to a Knight Frank report, while the market as a whole is broadly stagnant. Surprisingly, luxury home prices in Tokyo and Stockholm have risen during the pandemic. Neiman Marcus is the next in line to join J. Crew, John Varvatos, and True Religion on the fashion bankruptcy train. Although Neiman Marcus' CEO says restructuring will allow the more than 100-year-old retailer to make investments and turn itself away from a traditional department store, and customers will return. Disney's recovery starts May 20th with a handful of restaurants and shops in its Florida mall. Theme parks in Orlando, though, will remain closed, while Shanghai Disneyland is reopening, albeit with fewer than 30% of its 80,000-person-a-day capacity. The entertainment giant lost $1.4 billion last quarter. I'm Andrew Rode, Bloomberg Radio.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our number one priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
Global news.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the USwitch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Get your cook on with Asda. With Butcher Selection quarter pounder beef burgers, get a 4-pack for just £2.28. And salmon fillets, get a 2-pack for only £2.97. So dinner's always a winner. At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores online, subject to availability.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. Stocks are falling as the latest moves to relax restrictions amid the coronavirus pandemic raise concern over future lockdowns that could further hamper the global economy. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 down 0.5% or 15 points at 2914. The Dow Jones Industrial Average down 0.7% or 176 points at 24,152. And the Nasdaq's down 0.1% or 8 points to 9112. 10-year Treasury up 230 seconds, yield 0.67%. The yield on the 2-year 0.14%. NYMEX crude oil is up 1.5% or 35 cents at $25.09 a barrel. And COMEX gold is down 0.3% or $5.20 at $17.0870 an ounce. The euro 1.0831 against the dollar. The yen 107.46. That's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Greatly appreciate that. One of the joys that Paul Sweeney and I know is the diligence, the focus, the research that goes into work at Bloomberg News. And, of course, that was established by Matthew Winkler, editor-in-chief emeritus, full disclosure, the guy that said, yeah, I think you have a bow tie. You can work here. Anyways, Matt Winkler is joining us right now because he has been doing research. And, Paul, it is so important to know that the editor-in-chief emeritus of Bloomberg News is 24/7 on Animal Crossing. He is doing Animal Crossing at Nintendo like nobody else. Matt Winkler, folks, has done a jewel. It is a spectacular essay for Bloomberg Opinion on the resurrection of the toy business. Matt, what did you learn?
First of all, I learned that my better half is knitting up a storm and was having trouble getting supplies. So that was a leading indicator. Thank you very much for all that. I do what we all do on the Bloomberg, which is when March 15th came along, and that really changed everybody's way of life in the United States. Suddenly the coronavirus was everywhere, and we were nowhere, or rather, we were social distancing. And so the most important indication to me was which industries were leading. And, of course, there were some obvious suspects. You know those. But the one that was really taking off and making the most sense, actually, is toys and games, because everybody's at home and everybody needs to be preoccupied. And so the more we dug into it, and I say we because I can't do this without my wonderful colleague, Shinpei, is looking through historically, have we ever seen anything like this before? That was what made this significant. And the answer is, in the, for example, case of Hasbro, which did an IPO in 1968, it's never had an 8-week period like this in appreciation. And what Hasbro has experienced is experienced by all these toy makers globally. They've never had this dynamic rally like the one we're witnessing. And it looks like it's going to continue because the analysts who are typically changing their minds almost every other day with the COVID-19 are very convicted, so to speak, on and convinced on toys and games. They just see earnings and revenues continuing as they have right through the end of the year and on. So hey, Matt, that's the big picture.
When we think about the games, staying at home and all that kind of stuff, is this the board games that we grew up with, Monopoly and Risk and things like that, or is this kind of the electronic gaming and people playing Minecraft like Tom does all day after he gets off the air?
It's all of the above, because what you're talking about is every segment of the population. So it's board games like Monopoly, Trivial Pursuit, which have been around a long time. It's jigsaw puzzles. It's certainly every video game that you've ever heard of. Nintendo particularly is benefiting from this. It's essentially every part of the population needs to be amused because what else is there to do? And that's why these companies are all doing as well as they are. And we've never seen anything quite like that before, that it's so broad-based. If you go back to 2007, for example, that was the last time the industry itself was outperforming. However, that was at a time when the global economy, was growing at a rate of 5.2%. Nobody saw the financial crisis coming the way it did. And people on 4 continents were embracing video games like they hadn't before. So that was a completely different environment than the one we're in now.
Matt, I got time for one more question, and I say this with great respect. I look at what John Micklethwaite, Rado Gregori, Marty Schenker are doing and keeping Bloomberg News going during this pandemic. How do you feel this will turn out for newspapers, for local news, it's been a struggle for the news business for 20 years, I'm going to say, and certainly brutal in the last 10. What does this pandemic do for traditional news forward?
I think it accelerates the trend that we've sadly experienced. When I say sadly, and the demise of local newspapers, the evisceration of metropolitan dailies as we know them, and only really a handful of very strong national competitors like the ones you're familiar with, New York Times, Wall Street Journal, Washington Post, for example, be around for a while. Bloomberg, of course, Reuters. I think this has been a disaster, unfortunately, for what we call local news.
Matt Winkler, thank you so much. Editor-in-Chief Emeritus, Bloomberg News. Really fascinating column today, folks, on the resurrection of Hasbro, among others. Paul, if we turn to this week, and, as John Farrow mentioned earlier, we go to claims again on Thursday.
Yep.
Michelle Meyer, Bank of America, saying maybe it will finally be a better number, only 2.8 million. And then we go to retail sales. What do you learn? I don't know where the retail sales are now, other than the company that brings all those boxes to my door.
Yeah, I don't know, Tom. We've spoken. We saw the J. Crew, news about possible bankruptcy, and we know JCPenney's on the brink here. So I think, unfortunately, what we hear from a lot of the retail experts out there, Tom, is that this pandemic and the impact on the economy and on consumer behavior is just going to likely accelerate the trends that we've seen, which is not good for bricks and mortar retailers. So you talk about the retail industry being overstored and needs to, shut down more and more stores across the country. This is likely to accelerate it.
Let me do a data check here, folks. We do this, of course, driving forward through the day. A lot of important interviews coming up. There'll certainly be headlines from Bloomberg on Gary Kelly. That conversation will come up somewhere within the Bloomberg platform here with Southwest Airlines. That's got to be timely. I think Paul and Lisa will have those headlines. Paul, it's unbelievable. I can't believe I'm looking at this, but there it is. The Dow down 212 points, SPX down 18 points, and there's green on the screen where the NASDAQ 100 up 0.1%. The NASDAQ 100 will never go down again. We are produced occasionally by Richard Truman. This is Bloomberg. Good morning.
Have you wanted to speak a new language?
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the Uswitch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
For more than 20 years, Asda supported our communities. We've raised over £23 million for Fair Share and the Trussell Trust. And recently, we've donated supplies to frontline NHS workers and carers. We've always been proud to serve those around us. Visit asda.com/creating change for better. Asda, we're all in this together.
Imagine winning 10 grand. Yes! With Set for Life, you could win 10 grand every month for 30 years.
Get in! Amazing! Woo! Yes! Sweet! Unbelievable!
Set for Life from the National Lottery. Your numbers make amazing happen. Play Monday online or on the app. Prize may be capped. Rules, procedures and game-specific rules apply. Players must be 16 or over.
Want Apple's latest Mac?
From just £34 a month.
With no deposit.
Buy online now from krcs.co.uk. Your local Apple experts. And get your Mac with all this, plus 2 years warranty.
And free next day delivery.
See our full Apple range now at krcs.co.uk. Representative example, cash price 103306, 36 months at 33.97. Total payable 1222.92. Representative 11.9% APR.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs. Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn. 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
How do you kind of view the volatility in the marketplace here?
What are you looking at to give you some sort of compass through this period?
Companies across the board, across industries, really trying to shore up their balance sheets.
A lot of economists are just throwing up their hands and saying, we don't know.
Breaking market news and insight from Bloomberg experts.
There's only so much that you can speed up vaccine development. Because of all the dislocations, there's always relative value trades that you could be doing.
This could be a U-shaped recession rather than a V-shaped recession.
It's the uncertainty, I think, that is really spooking everyone.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good morning. It is Monday. Coming up, markets soften with Goldman Sachs predicting that stocks will drop by 20% over the next 3 months. We will discuss. Plus, a conversation about emerging markets with banker to the world, Bill Rhodes. Right now, though, let's head over to Greg Jarrett for a Bloomberg Business Flash. Greg.
Good Monday to you, Lisa. Stocks are down a bit as the latest moves to relax restrictions amid the pandemic have raised concern over future lockdowns that could further hamper the global economy. But Joe Quinlan at Merrill Lynch Bank of America tells Bloomberg the U.S. economy is at the maximum point of pain and investors should be climbing onto the stock train selectively.
18, 24 months from now, we're going to have a totally different conversation about probably debt, inflation, and other issues. But I do think there's growth on the other side, and there's opportunities now to put money to work.
We check the markets every 15 minutes throughout the trading day. The S&P is down 0.6%, down 19. The Dow is down 0.9%, down 219. And the NASDAQ is little changed, down 3. The 10-year is up 3/32 with a yield of 0.67%. West Texas Intermediate crude oil is up 0.7% at $24.91 a barrel, while COMEX gold is down 0.4% at $17.0620 an ounce. The dollar yen 107.45. The euro $1.833, and the British pound $1.2352. That's a Bloomberg Business Flash. Bloomberg Markets is underway with Lisa Abramowitz and Paul Sweeney.
We appreciate that very much, Greg. Jarrett, looking forward to these markets here, a little bit risk off here to get a sense of where the real action is with the equity markets. We welcome our good friend, Bloomberg Stocks editor, Dave Wilson. Dave, what are you looking at right here?
There's not a ton of action in the sense that we're kind of in a lull with first quarter earnings reports. I mean, we don't get the retailers until next week, and they sort of really bring the period to a close. So, I mean, you're left with kind of scattered results here and there. That said, I mean, the biggest gain and the biggest loss in the S&P 500 are both tied into quarterly results. The gain belongs to the drug distributor Cardinal Health, which is up almost 8.5%. Their fiscal third quarter results beat analyst average estimates in a Bloomberg survey. They reaffirmed their full year forecast. They raised their dividend, etc. And on the other hand, you've got Under Armour down about 11.5%. They've got two classes of shares in the S&P 500, so that's double the pain, you might say, for investors in the athletic wear maker. They had a wider first quarter loss than analysts expected, slowest sales in about 5 years. So, people aren't exactly willing to go out and spend on the newest gear. No surprise there. I mean, considering how things have shaken out as a result of the coronavirus pandemic, but it just kind of brings things back home again.
I was struck, one stock move that I just find fascinating, AMC Entertainment, jumping as much as 56% on this report that Amazon.com may buy that company, may buy the theater that you go to. And it's just such a fascinating move, if true. This is being reported by UK's Mail. I'm just wondering how much credence people are putting in this, Dave.
Well, I mean, the stocks jumped up, so you have to figure there's some credence put in it. That said, I mean...
Although, hold on a second. It rose as much as $2.31 to $6.41. So we're still talking about a pretty beaten up stock, right?
Beaten up with a whole lot of others. I mean, given that they've had to shut their theaters. So, from that perspective, you can understand the potential for a rebound. And if you think about it, I mean, last year, if memory serves, Netflix bought the Paris Theater in New York. And so they used that for some of their productions, the ones they want to qualify for the Academy Awards or whatever. So... you kind of get it from that perspective. Beyond that, I mean, this has got to be as much a hope trade as anything else. I mean, given that Amazon has got plenty of money and AMC certainly doesn't at this point, and they own theaters here in the U.S., they own the Odeon chain in the U.K., so, Amazon could certainly follow the lead of Netflix and get wider distribution for its movies if it wanted. The real question is whether they'd want to even be bothered.
It's interesting. I was looking at we've been talking a lot about the beleaguered retail sector. We had J. Crew file here. I'm looking at Macy's. They've attracted some Czech billionaire investors, yet the stock doesn't really seem to care about that.
No, it sure doesn't. I mean, this is a case where, it's one thing for, this gentleman, Daniel Kretinsky, to buy his 5% stake. It's another thing for that investment to pan out. A lot has to go right. And you've had another bankruptcy, Stage Stores, filing for Chapter 11. So, it's part of the bigger trend in that sense. And, you think about how badly Macy's has been beaten up. I mean, shares, even with this new investment, down 69% this year. So it tells you that, I mean, this is a company that has to work through a lot of issues, as its competitors do as well. So the idea that they're attracting interest from an investor who, if you look at his track record, has kind of liked the idea of being in some beaten-up retailers over in Europe, well, I mean, it's a plus, but it's not enough to really get the shares moving.
Just broadening out, a headline that really caught my attention this morning. Goldman Sachs analysts saying that stocks are due for an 18% drop after the recent rally based on sort of reality hitting equity valuations. And this has sort of been the big debate. How long can equities sort of exist in a divorced universe than the catastrophic economic data that we're getting, in particular having to do with the jobs market? I'm just wondering how interesting or compelling you found this, Dave, and whether it coheres with other views out there.
Well, it comes down to the basic question of whether you're going to have another pullback. And because 18% doesn't even get you to the lows that we've seen in the last several weeks. So, is it possible that stocks could pull back? Sure, it's possible. But, you think about this economic data and people are looking ahead. I mean, maybe it's 2021 they're looking at this point. You can argue that's a long way off and there's too much optimism and we have to work through a lot when it comes to the virus and getting the economy going at some point. That said, I mean, it's perfectly reasonable to think that you may get a pullback here, and Goldman is clearly coming out and saying, it's coming.
Yeah, well, it's definitely pretty gloomy when you look at the economic picture. It was so gloomy, in fact, on Friday that I want to offer up a bit of an apology to everybody because I did not do the dad joke of the day. And I actually got quite a few messages sort of scolding me for not doing the dad joke of the day. So today I will bring you from Bob Sinch over at Guggenheim, who really, I loved these. This is courtesy of him. I told my wife to embrace her mistakes, so she gave me a hug.
I saw that coming
that
my
one.
way. Yep, that was
and
good.
the next one that I absolutely love. My wife walked over and said, "You haven't heard a word I said, have you?" And I thought to myself, what a strange way to start a conversation. I like, Dave, that was the best. You just sort of have a resigned, we've all been there. They resonate with you. I will say, though, the response has been tremendous, and it just sort of highlights this need to try to stay somewhat optimistic amid this roll of just dismal information that keeps coming out. I promise, people always say to me, you're such a pessimist. And I'm thinking to myself, I'm really just reading the news. I mean, honestly, it's been quite a period of time, especially with that devastating report last week. If you want some levity, and if you have some levity and you want to submit it, please message me at LeBromowitz@Bloomberg.net or at Lisa Abramowitz1, and we will try to air it. Dave Wilson, Bloomberg stocks editor and submitter of many dad jokes, thank you so much for being with us. Right now, we are seeing in the markets actually a little bit of brightening, particularly in the NASDAQ, up about 0.1%. And I will say one area of note today is the crude market after Saudi Arabia said that it was going to voluntarily cut production potentially to the lowest since 2002. Right now, let's head down to our 1901 studios in Washington, D.C. Nathan Hager with World and National Headlines. Nathan.
Well, Lisa, moments ago, President Trump tweeted this, quote, "Coronavirus numbers are looking much better, going down almost everywhere, big progress being made," end quote. Of course, the president is trying to make progress to reopen the country, even as the outbreak edges closer to his own office. Vice President Mike Pence's press secretary tested positive last week. A couple members of the Joint Chiefs of Staff missed a weekend meeting after their own brushes with COVID-19. White House economic advisor Larry Kudlow tells ABC's This Week people who come into close contact with the president are tested daily.
Everybody wants to be safe. We're going to do the best we can. We'll follow the rules and guidelines of the White House Medical Unit.
The Trump administration's leading health experts are going to testify at a Senate hearing on the government's response tomorrow. Through a video conference, they and the committee chairman, Lamar Alexander, are all self-quarantining after exposure to people who tested positive. The Supreme Court is set to hear what could become the biggest cases involving President Trump. More on that from Bloomberg's Amy Morris.
President Trump is trying to keep House Democrats and a New York prosecutor from seeing his financial records. The High Court will hear back-to-back arguments tomorrow as it finds itself navigating a politically polarizing issue less than 6 months before the election. The court's rulings could determine whether the president's tax returns become public and whether he faces an accelerated criminal investigation in New York. Critics say the president is not above the law. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg.
Market upheavals.
The narrative is driven by uncertainty about the virus.
Political reversals.
It's not clear that some of the Republicans up on the Hill are agreed with the Republican White House.
Economic shifts.
The macro clearly being driven by the coronavirus outbreak.
Everything seems to be in motion.
Will it also mean a global recession in your view now?
But here you're on solid ground.
Looking forward to guiding you through all of this.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
The average time a resume spends on an HR manager's desk is 7 seconds, and most of them are tossed aside. Now imagine if one of those resumes belonged to Yasmin, who was
living in a shelter, juggling 3 jobs. I had to be resilient. That's something that you can't teach.
We rely so much on a resume, yet it could never tell the full story of someone who
had to be independent and take initiative, and that's how I handle every project I get.
Discover new ways to develop great talent at gradsoflife.org. Brought to you by Grads of Life and the Ad Council.
The market's in focus.
Sick of this. We're gonna do this doggy style.
Did somebody say just eat?
Me, get delivery like a G. See, hungry dogs gotta eat. I get mines every day, every week. Chicken wings to the crib, I'm sitting in. Burger in the low. Hope they put the pickle in. Wonton on a catamaran. Oodles and noodles, thank you, my man. Tacos to the chateau. Please, did somebody say just eat? Private jetting in the night sky. My man hand glide by with my fried rice. Right? What could you not love? Bought a slice on the side of the hot tub. Ooh, what you gon' do, boo? Chocolate fondue right on cue. Even dipping in the sea. I see food, seafood sees me. JUSTEAT.
Somebody say just eat.
Switch on Acorn TV, the brand new streaming service featuring world-class TV from Britain and beyond. Watch exclusive premieres like the colourful crime drama Queens of Mystery.
Once you have eliminated the impossible, whatever remains, however improbable, must be the truth.
And fan favourites like Inspector George Gently.
I'm just an old copper doing his job.
If you love drama with a little mystery thrown in, enjoy 30 days free with code ACORN30. Then just $4.99 a month. No adverts, no contract, cancel anytime. Join online today at acorn.tv.
With the shift to remote working, video conferencing has become the new normal to keep your business running. But is it reliable and secure? Cisco WebEx is committed to the highest security standards and already trusted by both small businesses and many of the world's largest organizations. Call, message and meet securely with Cisco WebEx. Sign up at cisco.uk/work-from-home. When secure remote work is critical, WebEx is essential.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
The garden tools that mean you can grow your own. The fire pit that turns tea time into an alfresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
We're all having to get used to the new normal. And at Birkbeck University, we're experts at being adaptable.
As London's evening university, we've been flexing around the lives of busy commuters for nearly 200 years. And you can find everything you need to secure your place for autumn online. From expert advice to virtual tours, a live chat with our students and course applications. Make the new normal, studying for the career that you really want. Search Birkbeck and it's new problem solved.
TSB believe in people helping people. So if you need a repayment holiday on your TSB mortgage, loan or credit card, get in touch and TSB will do what they can to help. To apply, go to tsb.co.uk. Interest will continue to apply and you will pay more interest overall. Terms and conditions apply.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
The S&P drops from a two-week high led by raw material and financial shares. United Airlines slumped after scrapping a $2.25 billion sale of junk bonds. Marriott International tumbled as its earnings collapsed, trailing analyst estimates. AMC Entertainment Holdings surged after reports indicated that Amazon might have thought to have held talks about a potential takeover. And Saudi Arabia announced an extra oil production cut to slash output to the lowest in 18 years as it tries to accelerate the recovery from an energy crisis that has devastated the kingdom's finances. We check the markets every 15 minutes throughout the trading day. The S&P 500 is down 0.6%, down 19. The Dow is down just over 1%, down 250. And the NASDAQ is little changed, down 1. The 10-year is up 230 seconds with a yield of 0.67%. West Texas Intermediate's up 1.6% at $25.12 a barrel. COMEX Gold is down 0.8% at $16.99 even per ounce. The dollar yen, 107.54. The euro is $1.0829. And the British pound, $1.2327. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
This Bloomberg Business Flash is brought to you by New Jersey Institute of Technology, ranked in the top 2% nationally for alumni mid-career earnings and number 1 for student upward economic mobility. Learn more at njit.edu. Well, we've certainly become accustomed to volatility in the financial markets and across the fixed income markets in particular here to get a sense of kind of how we should be thinking about investing in fixed income markets over the next several quarters. We welcome Mark Holman, CEO of 24 Asset Management with about $23 billion under management. We appreciate Mark joining us. Mark, thanks so much for joining us here. So as we think about these markets here, I want to start with kind of what your backdrop is, what your construct is for the economy going forward. Is this a kind of a V-shaped recovery here, or should we be preparing for lower for longer in terms of economic activity?
Yeah, I think undoubtedly I'd be going for lower for longer in terms of economic activity. I think the end of the last cycle ended with a surprise, as they often do, but this surprise was global. And when you've got a global surprise that hits every part of the globe at the same time, I think the impact is just that much more significant, and it's going to hit both the supply side and the demand side. And I think it just takes a lot longer to recover. These incredible aid programs that we've got around the world, whilst enormous in size, logistically just won't reach everybody. So there's some long-term damage to demand, which in my view means we're going to be spending probably the best part of 2 years to get ourselves back towards a Q4 19 type production level.
Mark, I'm struck, and so are a lot of people, about the disconnect in the slow recovery that a lot of economists and analysts are seeing, and stock markets, which seem relatively unfazed by this whole issue, at least based on the rally that we have seen over the past month. This morning, we have Goldman Sachs coming out and saying that at one point, these realities are going to converge and that stocks are poised to drop about 20% over the next 3 months. Do you agree?
Well, I think if you look at fundamentals, you have to agree that the market has really, really raced ahead, and it's really pricing in, as you described, somewhat of a V-shaped recovery. So I think, fundamentally, probably quite hard to justify where we are here. However, technically, I don't think we're getting the full picture. The full picture does include the incredible amounts of money poured in by the Fed and other institutions around the world, and we know they find these volumes of cash find their way into financial markets. And then these volumes of cash are going to be there for the foreseeable future. I think investors are saying, well, the Fed's behind us, or the ECB's behind us, or the Bank of England's behind us, And in particular, the action done in the US has been very, very broad. So I think investors have got confidence from that, and I think the liquidity in the market is making it a very, very painful rally indeed. It's a squeeze.
So, Mark, in terms of the credit markets here, we're starting to see some bankruptcies and defaults kind of start trickling in across the tape here. How do you think this is going to play out as you take a look at the credit quality out there in the markets that you look at?
I mean, credit quality is no doubt going to deteriorate pretty much across the board. There'll be very, very few businesses that will improve their credit quality while this is going on. And now, over the last decade or so, we've been somewhat immunized from deteriorating credit quality by the actions from central banks and governments. But this hit is just too big. So I think we're going to see a material spike in the default rate. It's very, very hard to predict exactly what it's going to be in the world of rated securities. We know that the individual consumers are going to have problems because aid won't reach them, and SMEs will have problems because aid won't reach them. And in the end, this does affect the larger companies too. It's been quite remarkable how quickly some of those companies have run out of money. So I'm going to stick my neck out and say I wouldn't be surprised to see a global default rate by the end of this year approaching 10%.
Wow.
Broadly 2.5% at the end of last year. So it's really quite a big move.
Where are you hiding, Mark? Where are you investing?
Well, it's tricky. In the corporate world, really, there's a long list of sectors that I think you really need to try to avoid. And, whether it be metals, mining, energy, which are sort of, late cycle names that you don't want to, they're on late cycle sectors. And then there's the ones which are perhaps more impacted by the current situation, where travel, leisure, retail, of course, automotive. So I think that those are the kind of areas to avoid. And where you can, I think, focus on sectors that are more resilient, obviously, but where the balance sheets of the companies are more resilient or regulated, where there's more visible earnings. So I would say, contrary perhaps to the last recession, let's look at banking. Let's look at financials. Insurance is an incredible way of repricing itself. The banks have got very resilient balance sheets, thanks to the terrific work done by the authorities, and utilities generally regulated much more solid balance sheets. And each of these industries are all open for business today. We're all still paying the bank interest. We're all still taking our insurances out. We're all still using these utilities. So they've got the resilient balance sheets, and then they've got more visible earnings. So I think that the list of sectors is pretty small, but they're quite broad. There's quite a few companies that you can still invest with there with a lot of confidence.
Mark Holman, thank you so much for being with us. Mark Holman, Chief Executive Officer of 24 Asset Management, based in London with $23 billion of assets under management. And I'm struck by the idea that insurance companies and banks will be the havens this time around. It just sort of highlights how different this particular crisis is than the last one, Paul.
Yeah, exactly. When you think about the big money center banks and being bailed out, and the AIGs of the world. And so as we've heard, time and time again, this is very, very different. This is an external shock, a pandemic, a medical issue, healthcare issue, not something endemic to the financial system per se.
Yeah, indeed. Coming up, we're going to have a conversation about emerging markets. We'll speak with banker to the world, Bill Rhodes, about the road ahead for the likes of Argentina on the brink of defaulting yet again. This is Bloomberg Markets.
This is a Bloomberg Money Minute. Stocks are declining with the Dow down 215 points. The president said he is in no rush to enact another round of economic stimulus. However, his economic team said informal discussions are underway with members of Congress. President Trump said that the country will start buying up to $3 billion in surplus dairy products, meat and produce from American farmers starting this week. The USDA has approved an initial $1.2 billion in contracts under the Farmers to Families Food Box program. Hospitals are being pushed even further into financial ruin with the coronavirus. The onslaught could result in some $202 billion in losses for hospitals across the country by the end of June. That's according to the American Hospital Association. And Sotheby's is offering a game-worn pair of Nike sneakers from Michael Jordan's glory days in a standalone online auction. The autographed shoes estimated to fetch as much as $150,000. Courtney Donahoe, Bloomberg Radio.
Sweet strawberry icing. You're in Goodwill, and just past that vintage denim jacket you spot miniature donut earrings. You lean in. That's the scent of shopping success. Because at Goodwill, every item you buy funds local job training and more. So bring home those donut earrings and bring home so much good to your community. Goodwill. Bring good home. Brought to you by Goodwill and the Ad Council.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the terminal can take your workflow to the next level at Bloomberg.com/professional.
Are you interested in a challenge?
Sick of this. We're gonna do this doggy style.
Did somebody say just eat?
Me, get delivery like a G. See, hungry dogs gotta eat. I get mines every day, every week. Chicken wings to the crib, I'm sitting in. Burger in the low. Hope they put the pickle in. Wonton on a catamaran. Oodles and noodles, thank you, my man. Tacos to the chateau. Please, did somebody say
just eat?
Private jetting in the night sky. My man hand glide by with my fried rice. Right? What could you not love? Bought a slice on the side of the hot tub. Ooh, what you gon' do, boo? Chocolate fondue right on cue. Even dipping in the sea. I see food, seafood sees me. JUSTEAT.
Somebody say just eat.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
For more than 20 years, Asda supported our communities. We've raised over £23 million for Fair Share and the Trussell Trust. And recently, we've donated supplies to frontline NHS workers and carers. We've always been proud to serve those around us. Visit asda.com/creating change for better. Asda, we're all in this together.
While most of us are looking out for each other at this time, sadly, fraudsters are trying to take advantage of the situation. Here's Chris Ainsley from Santander with advice for keeping your money safe.
If you're buying anything online, take care and don't pay by money transfer. Always pay by card. Take time to check the seller is genuine, and if you're unsure, then stop and don't send any money.
For more advice on keeping your money safe, visit santander.co.uk.
Typical Danny. Last night I was chilling with my girls, but ended up spilling my Chardonnay all over my fave lilac nightie when I saw the photo I was tagged in. State of my fake tan. But no worries, just one wash and my clothes will smell perf with Surf. Surf gives you long-lasting fragrance with natural essential oils. Find your fragrance in Surf's laundry range.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we're going to chat with banker to the world Bill Rhodes. We get his thoughts on emerging markets. Plus, Southwest Airlines CEO Gary Kelly discusses earnings and outlook with Bloomberg's Vonnie Quinn and Guy Johnson coming up in just moments. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Stocks are in the red, Paul, as investors weigh the latest moves around the globe to relax restrictions for the pandemic. While economic data continue to highlight the pain from the health crisis, we check the numbers every 15 minutes throughout the trading day here on Bloomberg Radio. The S&P 500 is down 0.6%, down 16. The Dow's down 0.9%, down 212. And the Nasdaq's up 0.1%, up 10. The 10 years little changed with a yield of 0.68%. West Texas Intermediate's up 1.3% at 25.07 a barrel, with COMEX gold down 0.8% at 1,700 even per ounce. The dollar yen 107.53, the euro's $1.820, and the British pound is $1.2346. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
We've been talking a lot about the pain in the developing world as that area sees a disproportionate hit from the removal of financing from the likes of the United States and Europe. Here to speak with us, we are so pleased to say, is the seminal expert on this area, Bill Rhodes, President and Chief Executive Officer of the William R. Rhodes Global Advisors, former Citibank chairman, also one of the key architects of the restructuring efforts in Latin America during the 1990s, and the author of the book, Banker to the World. Bill, thank you so much for being back with us. I know that you see potentially a crisis in emerging markets that exceeds what we have seen in recent history. I want to sort of focus in on some of the hot spots, starting with Argentina. Argentina on the brink of defaulting once again. Is there a threshold for how many times a country can default and what the consequences will be?
Anyway, first of all, it's great to be on with you, Lisa, Paul. I would say that in the case of Argentina, they've defaulted 8 times in their history. I've restructured them 5 times, and they're on the brink of a 9th default. They were going to declare a default today, and they moved it off to the 22nd for further discussions with the creditors. But they need to make a $500 million payment on their $86 billion of debt that they have, in addition to the $86 billion of normal debt in the sense of sovereign debt to creditors. They also have an outstanding of somewhere, depending on how you look at the disbursements, between 47 and 50 billion with the International Monetary Fund. So they are basically